Good morning, everybody. It is Friday, February 2nd, 8:51, 2024. And we are here and we are live back with another market open. We just had earnings yesterday for three of the biggest companies in the world, and two of them smashed. One of them didn't do that well. And it was just really good earnings from Meta and Amazon. So we got a lot to talk about from that perspective. Apple was okay, not really the best. Meta and Amazon, both in the pre-markets, are doing phenomenal. I mean, that's what you expected. Meta right now is up 17%, $462. You're probably wondering why are they up that much, and we're going to talk and discuss why they're up and, kind of go through what's going on there. And then you got Amazon that is up 6.7% at $170, and we'll be talking about why they're up as well. Chris says, did you get any sleep last night after your Celsius day? Says, I slept pretty late. I think I slept till like 2:30, dude. But I still got to figure out the rest of the Celsiuses. It definitely kept me up, so I guess it did what it needed to do when it came to energy. So we got those two companies, and then Apple right now in the pre-markets are down 3.39%. On top of that, we got a partnership last night for Palantir, which was a commercial partnership that I've gotten like 10 DMs about from people who live in Australia that are just ecstatic that Palantir is working with what there is a Walmart with Australia. I mean, what Palantir is working with in Australia is basically a Kroger's or Walmart. It's called Coles Supermarkets. And a lot of the Aussies are very, very excited for what's going on with Palantir. So we're going to discuss and talk all about that and keep going from there. Broccoli, I Show Sad, Nick Piercy, Ray, Edmund, Jittery Hobo, Adrian, Mr. Seymour Duck, Shades, Tu Allen, Robert, Dale, Trucker Rob, Simple Investor, Victor Hernandez, Monty, June, Gerald, Mark, Franz, Baker, Gift Magic, Bay Ray, Chris, Diogo, Benny, Doug, Brown Group Inc. Thank you all for being here today. David, Jeremy. Let's get into it. The thumbnail says market close. Yes. That's how you know it's been a tiring week. The thumbnail says market close. Well, regardless, it's the market open. And we've got a lot to talk about. I feel like it's kind of a chill Friday, February 2nd. Nothing too crazy. Obviously, it's been a very crazy week, but I feel like it's going to be a very chill market open. We don't have any breaking earnings news. That's why this Friday is pretty chill. We just have to go through all of the crazy earning news that we got yesterday and kind of discuss how it ended up playing out. Dan says, dude, what's the story with SoFi? Well, let's go to SoFi. Where's SoFi right now? Damn. It's down 1% in the pre-market. So, oh my God, that market's actually kind of down. If you're not Apple or Amazon, the market's actually kind of down right now, or SMCI or Nvidia. If you're not one of those four companies, the market's not treating you that, which I actually thought the market would be doing very well in the pre-markets because of these earnings, but not really the case. A lot of these companies are actually red right now. Okay, so I think, let's recap. Let's recap, and talk about what happened with Meta and Amazon. And discuss what's going on. So, yo, Bay Ray, that's a wild joke. That's a wild joke, bro. Jobs report, okay. Oh, shit. Yeah, we got private ADP numbers, right? Oh, here it is. These are full U.S. economy jobs. All right, so let's do that first. That is actually, I actually knew that was coming today. I don't know how I forgot about that. That's the Celsius, dude. It fucking created a memory loss. All right, here we go. Jobs report. Let's pull this one up. Is that why the market's a little red? Is it a hot report? U.S. economy added 353,000 jobs in January. Much better than expected. Yeah, that'll do it. That'll fucking do it. Why is this happening, dude? This is a great report, but dude, we estimated 185 grand. We added almost double that, 353. Yeah, the market's not really going to love that yet. That's not. Now, granted, so why does the market not love that? Because more jobs means more inflation. More people have money, more spending, yada, yada, yada. However, it's also more strength in the consumer for being resilient. So technically that should be a good thing, right? But good news is bad news for stocks these days. Yeah, that's weird, dude. That's a tough report. It's not okay. Wage growth has also showed strength, and average hourly earnings increased 0.6%. Double them. Yeah, that one right there. I mean, that's not wage price spiraling or anything like that, but wages are up 4.5% over the year. That's above the 4.1%, and it's up 0.6% in the month. That's double what we expected. The market expected a 0.3% increase in wages. Yeah, that'll do it. That's why the market's red. Now, Meta and Amazon are green because Meta and Amazon just killed it, and it's hard to keep them down. But I was wondering when I woke up and I took a look, I was like, why is the market great? Like, I was expecting Meta and Amazon to just carry the market and things to go great. And even though it's a Friday and we tend to have a sell-off, I thought things would be all right. But nope, we got a decline here. Jobs growth was widespread on the month, led by professional and business health services, 74,000, healthcare, 70,000, retail, 45,000, government, 36,000, social assistance, 30,000, manufacturing, 23,000. December's job gains were much better than originally reported. Oh, wow. So not only was the month posted a gain of 33,000, 330,000, which was an upwards revision of 117,000 from the estimate. So not only was January incredible, December was way more than we thought. And November was 9,000 more than what reported. December was almost 120,000 more than what's reported. And then January crushed it against expectations of 185,000. Everyone in America has an opportunity to get a job. Everyone in America has an opportunity to get a job. It's just, is that the best thing for the stock market? Wow. What a report on these jobs. So November and December had way more jobs than we thought. It doesn't seem like these are all cyclical, or else we would see a lot more of a decrease in these jobs. And then January, the market expected 185. We brought in 353. Unemployment rate is still 3.7%. The estimated rate change would be 3.8, and we had 3.7. So we still didn't even increase on unemployment. And, JPOW thought we would be at 4.1 by now, and we're relatively below that at 3.7. Italy, by the way, has unemployment at 7.2. It's the lowest it's been in 15 years, but we are, half of where Italy's at. So this is really interesting. Chris says this is all government debt-fueled spending. Okay, I think that could be one thesis. That's probably contributed to it. I mean, you got government at 36,000 jobs coming in. We do know that the government has been spending a bit more money over the past year in a variety of different ways. So a lot of this can be government oriented, but it would be interesting to see how much the private sector really is contributing to this, and how much maybe the private sector is getting subsidized to contribute to this, because this is a hot report, dude. This is a hell of a report. Let's look at the market right now. It's boomer retirement spending. I mean, it could be as well. That's one thesis on it. The S&P, the SPY. So the S&P is like, it's down. Yeah, it's down. I mean, it's barely red. It's up 0.02%. The S&P doesn't know what to do, because it wants to go up because because Meta and Amazon are a big part of the S&P. And it's like, well, if 2 out of the 10 biggest stocks inside of my ETF are massively up, I should probably be up. But if the jobs report is this hot, then I don't know. Now, here's the question on Meta, okay? Here's the question on Meta and Amazon and big tech in general, okay? So our good friend Puru Saxena, our guy, he says that big tech is oversold. Now, he was also calling for a recession going into the year. But he says Amazon, Alphabet, and Meta are fantastic businesses, but are already very big, and their revenue growth rates are past their prime. Monster returns over the next decade likely to come from next generation younger businesses, which are compounding at a much higher clip. He's betting on small caps, essentially, versus the big caps. So it begs the question, and we'll use this to transition into Meta and Amazon, right? Because we still got to do our recap of them. Are these companies getting to a level now where they're a little too expensive, given the run-up that we've seen? I don't think today's going to be the day where that's determined. I think if you own Meta or Amazon today, I mean, look, maybe you take profits if you want to, but I think Meta and Amazon are going to do fine today because everyone's high off the euphoria of those earnings. But I think things might settle down soon in the macro and in the broader big seven. I mean, Nvidia, SMCI is at $600. Like, at some level, it can't be this crazy this quickly. I don't know. We got the 10-year coming down. So 10-year right now. So that's pointing to equities to better. Well, 10 years up a little bit, right? We're at 4%. We were at 3.895 yesterday. Money markets, I don't think there's an update on that. Oh, no, we got it. Whoa. Holy guacamole. This is one of the most interesting money markets I've ever seen. Wow. Look at this, dude. Look at this. This doesn't make any sense, but it also kind of makes sense, but it doesn't. All right, here we go. February 1st, money market funds increased by 41 billion to a solid 6 trillion in the money market funds on the week ended Wednesday, January 31st. Last update we got January 22nd, it decreased by $1 billion. So we saw the first decrease in January because we saw 3 consecutive increases. And now we got a Uno card reversal, 41 billion to $6 trillion. Why is this happening? This is an interesting one. Why is this happening? Why are money market funds acting this way? I would argue the reason this is happening is because it seems like people are afraid that this is the top. I mean, 41 billion is not a small amount of money going into money market funds. That's not. Thomas, I'll talk about the partnership in a second. We're just going to do Amazon and the Meta preview, and then we'll get into the partnership. It was about 5.93 trillion a couple weeks ago, so now it's a solid 6 trillion. But I'm wondering why 40. You would expect that money to get out of the money markets, and maybe look after these earnings, because this doesn't take into account Meta and Amazon and Microsoft and Google. Maybe after these earnings, some of that money decreases and they go into these companies. But that is a clear signal to me that there are financial advisors in the United States that simply feel the market's at a top and they're advising their clients to sell and then take 5.5%, and they'll get back in after a bit of a dip. I mean, that's what it's telling me. Now, maybe I could be wrong, but that's what it looks like. But I did not expect that. 41 billion is a lot. That's a lot. Okay, so let's talk about Meta and Amazon. So why did Meta and Amazon do some of the, just like the most incredible things that you could expect after earnings? They won earnings, in my opinion, Meta in particular. So let's talk about them, and then we'll go from there. Meta has issued a 50-cent dividend. It is now a dividend-paying stock, which is absolutely insane that Meta's paying a 50-cent dividend, but they're paying a 50-cent dividend. So if you own a Meta stock, $2 a year you get just for owning the stock. It's a very small yield. Obviously, the company is still going to grow. They're guiding for growth, but the fact that they're giving you 50 cents, it does signal that they're probably not going to grow as much as they were growing over the past 10 years, which is normal. When you become a $1 trillion company, like, yeah, you're probably going to start growing less. But it's such a relatively small amount in regards to Meta, given the cash that they have, that it's almost like, hey, we have so much cash, we don't know what to do with the cash, so we might as well reward the shareholders with the cash, which is the beauty of capitalism, which is that if you invest in a company, you have a thesis around a company, the company grows to be so big that they have so much excess cash on their books that they'd say, look, instead of investing it, instead of putting it here, instead of getting a 5.5% return, the best thing we can do is to thank you as a shareholder for owning the stock, and we're going to give you a dividend. So you got a 50-cent dividend. You have a $50 billion buyback plus the 30 billion that was not done over the last year. So that's $88 billion, 38 billion they have left. They can incorporate into buyback. So if there is a dip, let's say to 300, let's say the market really takes the shitter, you got 88 billion you could just dump into your stock and artificially start to get it to move higher, because the market will see, all right, here's a little bit of a floor to the stock. They beat on revenue, 40 billion versus 39 billion. EPS, they beat 538 versus 384 expected. DAUs are almost at 4 billion. I mean, like, the company just filed on all cylinders. And I listened to the call. Mark was very clear. AI is going to be a pivotal component of everybody's lives, whether you're a creator, whether you're a consumer, whether you're an advertiser. Reality Labs is still losing a crap ton of money. By the way, Meta would be about $750 a share if they didn't lose the almost 100 to 120 billion they've lost on Reality Labs. But regardless, that is the risk they're needing to take to be able to pivot the company into the next generation of where the world is going to go post screens. And so I think that's money probably that's well spent. The good thing is they've been able to just fuel the advertising business and subsidize all the risks they want to take. And then on top of that, they cut 22% of the workforce. They cut almost 10, 15,000 employees. So you got Meta that just fired on all cylinders, and you got the markets being like, well, at some level, we should invest in Meta. I mean, what else do they have to do? And that's why you see they're up $460 a share. I mean, at 390, I kind of thought that it's all right. It's a little expensive, but no, the market said it's not expensive with these numbers anymore. One thing I want to say about the dividend, a lot of people were like, oh, the dividend doesn't matter, 50 cents a share, it's not that big of a deal. It really does matter if you're an institutional investor. I mean, these institutions have tens of millions, if not hundreds of millions of shares of Meta. When you have, 5-10 million shares and you're getting $2, I mean, let's say you have 5 million shares and you get $2 a share just to own the stock. You're making $10 million just to own it. And let's say your average is anywhere below 300. I mean, if you don't see Meta going below 300, you're in the money. Your stock is up 17% overnight. And you're getting 10 million bucks on those 5 million shares for doing nothing, dude. For doing nothing. So if you're an institutional investor, those 50-cent dividends add up across all the shares you have, and you're having hundreds of millions of shares, most likely. So I think it's a genius idea. Absolutely genius idea for this to be happening for Meta. So that's why I think it's very exciting for Meta, and that's why we got those. I think that's why Meta's up right now. In the context of Amazon, so Amazon, AWS growing at about 24% year over year, or sorry, 13% year over year. Overall business, 170 billion versus 167 billion the market expected. Their capex came down pretty dramatically. We'll see what their PE turns into as soon as the market opens and get an update on both of those companies as well. It'll be very interesting to see how the market kind of takes them. And Andy Jassy on the call, advertising 14 billion, 22% year over year growth. Advertising is really what's starting to grow. Subscriptions 10 billion. E-commerce and in overall in the store 70 billion. Andy Jassy on the call, CEO, basically said, look, we are a company that is now one of the best AI plays because we understand how AI is going to impact every sector of consumers' lives, whether they walk into a Whole Foods, whether they're shopping for something. They launched something called Rufus, where you can ask an LLM chatbot, hey, what are the best running sneakers? And it gives you the answer plus a product recommendation, which is like the best version of an LLM. Like you get an answer and you get to buy something. I mean, like that's just money in the bank for Amazon. And as they increase their margins and decrease their capex, the PE starts to go down and the company continues to do well. This is one of those companies that's just going to, it seems like it's a company that it seems like all of Mag 7 is something everyone should own for the next 7 years. I mean, that's it just till 2030. It seems like these companies are not slowing down. It seems like Arc Innovation and the Rokus and the Coinbases and Teladocs of the world was complete bullshit compared to Mag 7. These are the guys that are innovating. These are the guys that have the money to innovate. And these are the guys that are not stopping when it comes to continuing to prove to the world that they know what to do when it comes to actually building enterprise software and consumer software that affects the entire world. So it's very, very exciting to see what's happening right now for Meta and Amazon. Bay Ray says, if you were a dog, Amit, your name would be Rufus. Okay, so we're going to ask the question in the chat as I play this video. I'm afraid to ask this question, but we'll ask the question. If I was a dog, what would be my name? I am so afraid to see the answers. I think Rufus is not the worst answer, but I'm afraid to see this. All right, let's get a panel. Here's Dan Ives and a bunch of other people with their reaction to Meta earnings. And then we'll talk about Amazon. And then we'll do Apple.
Mike Santoli, it's been a while since we heard from you, so I got to go to you on this, particularly when it comes to the dividend here. Yes, the numbers overall are good, but, we've got Meta well above 400 a share. I know it peaked above there a few days ago, but it had been in the dumps for a long time because of how much they were spending in part on the metaverse and the fact that there were all these questions about whether the business model was broken. What does this mean for this kind of tech company that traditionally has shied away from a dividend, though we know Apple did it years and years ago, to express this kind of confidence in cash flow and this sort of, I don't know, maturity?
Yes, I'd say all of that applies, John. Pretty assertive statement that, look, there's enough to go around. As of September 30th, earnings for this quarter were supposed to be 483. They came in at 533. That was only 4 months ago. You got to keep in mind the momentum in the underlying business. They are making gestures of capital discipline, of shareholder friendliness. They seem to have obviously taken to heart the criticism that they were being profligate and spending big. Very much, I think, setting themselves apart from Alphabet, which has not paid a dividend after a longer history as a public company, and they're kind of happily having these loss leader businesses on the side. So obviously, Google's an amazing business. Meta's trying to maybe, be a little bit distinct from that. There was a time when Microsoft initiated its dividend. There was a time when people say, "Oh, that's it. The growth years are over. We can't. This is now a cash cow business." Clearly, that's been proven in hindsight to be false, as Apple has proven that false. So it's interesting. It's about a $2 annual rate of dividends, so about 0.5% on the stock price right now, but it's a start.
Yeah, I mean, there's a lot, Dan Ives, to like about this report. A lot of beats across the board, with the exception perhaps of Reality Labs' losses being a little bit bigger than expected. But I mean, headcount We were talking about the cost controls at Meta, and it really sent the stock higher last year. There was an expectation that maybe perhaps their spending was going to increase in 2024 as they continue to invest in AI. The fact that they're holding that estimate, $94 to $99 billion, steady with previous estimates, and that their headcount's down 22% year over year, tells us what?
It's a turnaround for the ages. I mean, the comeback kid Zuckerberg, I mean, go back a year and a half ago, and now you're doing a dividend. Subscriber growth, digital advertising. I think you're seeing a narrative here. We saw it from Alphabet, saw it Amazon here. Digital advertising, unless you have a telescope, hard to find the recession. And I think this is going to be super bullish across the board. This is a stock that could have a 5 in front of it.
Paul, what does this tell us about popular narratives? Dan just referenced it a year and a half ago.
I agree. This is definitely a stock that could have a 5 in front of it. Dan Ives just with these metaphors. I don't know if he thinks of them on the spot or if he he pre-plans them. But could this be a stock that has a 5 in front of it? Why not, dude? Why not? I mean, Meta right now is going to open at being a $1.3 trillion company, $1.2 trillion company. They're $40 away from having a 5 hundo in front of it. And Steve yesterday said that on Finance Junkies, maybe they split the stock when you know what would have catapulted them to be like 480 right now if they had done the dividend, the buyback, and they did a 5-for-1 split. Meta would be worth $90 on a 5-for-1 split right now, which would be, I think, very exciting towards option speculators and retail investors. Just in general, it gets more enticing to buy shares of a company when it seems low, even though it doesn't affect the underlying fundamentals of it. So if they did a split, I think this would be even higher. But if they get to 5 hundo, I think that could happen. And you got to ask yourself, what's stopping them, right? Like, what is the headwind? As Dan Ives says, if you have a telescope, you're trying to find the recession. What is the bear case for the broader market? And yes, there are bear cases, but when companies put up numbers like these and they give guidance the way they have, it's just really hard to be a bear, dude. It's like, I don't necessarily know exactly what is the fantastic bear case that everyone sees. Are these companies a little overvalued because they run up a lot? Sure. That's fine. 10% pullback, sure. That could happen. That's not that crazy. But, Meta went from 380 to 88 in 2022. I don't know if we see a move like that happening again. And I think a lot of the bears, like Cantor Fitzgerald, right? One of those firms that's just like Mike Wilson. I have to get his updated thoughts. But if they think that's happening again, like they can be right about a 10-15% correction, even give them a 20% correction. But that was a 70% drawdown, dude. I don't know if that's happening. Let's get an update on Amazon, and then I'll discuss the Palantir partnership, which the Super Bowl is on for Monday for Palantir. And the partnership we got yesterday night, I wrote about it in my Substack. If you're not subscribed to my Substack, dailypalantir.substack.com, you would have got my thoughts on it. But that partnership was phenomenal. So let's just view this thing from Amazon, and then we'll talk about Palantir.
See you nodding your head. Your reaction.
Yeah, now is the key. I mean, I think fears you'd have 11, 12% growth. You saw 13%. It goes to really the debate here. I mean, you have Redmond leading, of course, where Google is in the cloud. Where's Amazon? You're starting to see re-acceleration. This is going to be the focus for Jassy on the call.
Paul Hickey, for Amazon, North American segment operating revenue came in, it looks like, pretty strong, 105.5 billion versus 103 expected. That's for the revenue on the top line. International revenue also a little bit stronger than expected. We just talked about AWS. Does this kind of stack up well enough in your estimation versus what we just saw from Microsoft, which really outperformed across just about everything?
Yeah, no, I think 13% they hit the AWS number right on the dot. The North American sales strong, and what you're seeing is Amazon able to, they put in all that investment over the years, and they were, the stock was punished for that. But now, they beat estimates on earnings by 20 cents. They're reaping, those investments now and benefiting from it. So that's an important thing to watch. They've continued to invest over time, and it stands to their benefit. And making the cloud numbers, which some were a little bit worried about, right at 13% on the dot, is certainly something that people can take heart in.
Yeah, Victoria, I mean, it was Amazon Web Services. It was a report card on the holiday retail season. And we have commentary here from Jassy saying that Q4 was a record-breaking holiday shopping season. And then it was also the advertising business, which we know is growing very quickly for Amazon. Shares are up right now, almost 4% with the initial read on this report. What we've heard so far, your takeaway?
Yeah, I like it. I think we knew that retail was going to come in strong, and I'm happy I participated in helping their earnings there over the holiday season. I think we all did. But look, we knew retail was strong from credit card and some high frequency data. AWS is great. It looks like maybe that trough is in. We'll see growing there.
Okay, so Amazon killed it. Amazon did a very good job. Advertising was great. E-commerce was great. AWS was great. We'll see, how they perform at the open. Meta right now is up about 15%, so it's down from that 17% range in the pre-markets. But in general, there was nothing to complain about for Amazon and Meta. So if out of the big seven, you went long Meta, Amazon, and Microsoft, you would have had a good earnings. We don't know about Nvidia yet. We'll see about them in a second. But you would have had a really good earnings seasons if you just had your top two holdings as Meta and Amazon. That would have been, the craziest thing. And I triggered some people last night on Twitter, even though, it was done in good jest. I said, imagine selling Meta and Amazon over the past year to buy Tesla. And people weren't really mad in the comments. They were just like disappointed, like they were just like, damn. Like, let me show you guys some of these responses. I mean, this is the mood we had. We just had these were the gifts. People were just sad, dude. They were just sad. Look at this. Sigh. That was me. I admit it. It's like, I didn't even mean to make people feel bad, dude. It was a funny joke, but people are just sad, dude. Because when you're a Tesla shareholder, you're looking at fucking this Instagram advertising company go up 17%, and you're making the most interesting vehicles, the most robots, like you're doing the crazy shit with FSD, and you're down 10% after earnings. It's tough. It's tough. So that's what we saw there. By the way, real quick, for those that are on Twitter, I am doing a Twitter Spaces with my guy Holes Marg Catalog. If you know this guy, he is very big on Twitter. He has about 420,000 followers in the Tesla space, electric vehicle space. He does a ton of FSD videos. So 2 p.m. on Twitter, maybe I'll stream this on YouTube as well. Maybe I'll see if I can do both. But I'll be talking to Holes Marg Catalog, the main Twitter dude for Tesla. And we'll just be talking about Twitter, and we'll be talking about Tesla. And he quote tweeted my tweet, and he was like, well, Tesla's up 875% in the past years. The rest of these guys are, barely up 100, 200%. And so we'll be talking about, the theme of the talk is, what is Tesla going to do to outperform large cap tech in the next 5 years? That'll be the discussion. So it'll be super fun. Okay, let's talk about Palantir, because Meta was cool, Amazon was cool, but we all know that the Super Bowl for this channel, for this community, even if you don't own Palantir in this community, you're here because of Palantir in some way. Put in the chat if you found this channel without Palantir. I'd be very curious how you found this channel if it wasn't Palantir. But we are here because of Palin mother effing tier. And that's happening on Monday, 3:30. I'll be live. We'll be live 3:30 to 4. Those 30 minutes, I'm going to be a nervous mess, just jittering around like I'm on fucking crack or something. Maybe or I'm on Celsius, loaded up on that. And then 4 o'clock, we get the numbers. Now, I'll talk about my expectations in a second, even though you guys know my full expectations and what I'm thinking about. I'll do a video on this as well. But the partnership we got yesterday was just incredible. The partnership we got is the partnership I think we have been looking for AIP. And maybe Palantir has like 30 of these partnerships ready to go, but they just finally are starting to announce them. Here's the partnership we saw yesterday. Everyone from Australia has messaged me saying that this is a very big deal. So let's discuss it real quick. Palantir is partnering with Coles Supermarkets Australia. It's a public company in Australia. Cole will leverage Palantir's platforms, including AIP, across its store operations to better understanding and addressing its workforce. By integrating data into one system, Coles will connect its C-suite into the shelf edge in stores made by more than 840 supermarkets. Coles plans to support decision-making to optimize its workforce, including better workforce planning, shift efficiency, and a more granular understanding of spend as it relates to enhancing the experience for shoppers. Real quick quote from Ashwin Rajan, head of commercial for Australia at Palantir. Our partnership with Coles, an iconic Australian retailer, demonstrates the strength of our Australian commercial business and continues our growth in the retail industry globally. Configured on Palantir, the suite of workforce uses will identify opportunities over 10 billion rows of data, compromising each store, team member, shift, and allocation across all intervals each and every single day. Foundry enables these capabilities by bringing legacy data systems, machine learning to a shared end-to-end view of Coles' retail ecosystem. Okay, so I am not from America. I am not from Australia. I am from America. I have no idea what Coles is. Okay, Coles to me is a whole different thing than what Kohl's is to the Aussies. Okay, Kohl's is this website right here. And if anyone's from America, let me know. This is my Kohl's, Kohls. This is where my mom sends me every other day to return her freaking Amazon packages because they have a partnership with Amazon. And that's the only reason Kohl's has any foot traffic is because people come in the damn store to return their Amazon packages and then they end up buying some stupid shit. Okay, so this is what Kohl's is. Apparently, and I did some digging last night, Kohl's in Australia, and the digging was very easy when you're getting comments like this. I'm from Australia, says Rocky Invest. Kohl's is not only massive, they have tons of other retail brands. Getting Kohl's is like getting 30% of Australian big retailers. Kohl's did $41 billion in sales in 2023. All 840 locations will be using AIP. This is not just some small grocery chain. This is similar to what is Kroger's in the United States. Some people in Australia compared it to Walmart, given that there's, a Kohl's is a 5-minute walking distance to people in Australia. Just like Walmart is really like a 5 to 10 minute drive. I mean, if Walmart's not within a 5 to 10 minute drive of you in America, then you're in the outskirts of the States. I mean, it's hard to not find a Walmart. Same thing with Kohl's with the Aussies. So why is this so important? Well, to me, and Kohl's has publicly stated that they have a cost-cutting initiative for 2023. They want to get more efficient. They want to be more operational. They want to get more lean. This is a 3-year deal. They're acquiring or procuring Foundry and AIP, and they have 10 billion rows of data in regards to their very complex supply chain, scheduling, all of the data that they have in terms of the workforce, the people that work in the white collar jobs, the people that are not just at the stores, but the people that are managing the corporate headquarters. There's a lot of data to be able to incorporate for one of the biggest retail chains in Australia. They have selected Palantir to be able to do it. I mean, this is the exciting thing, dude. This is the exciting partnership we're looking for. It's a 3-year deal, 840 locations. It's an international commercial deal. We've been dying for international commercial for so long, and we finally get it. And it's a partnership that I would imagine is going to expand further and further. If Palantir can do this for Kohl's, why can't they do this for Target? Why can't they do this for Walmart? Why can't they do this for the Kohl's of South Korea or the Kohl's of Japan or for the Kohl's of Indonesia, right? Like, why can't they expand massively into these huge grocery chains and in all these different parts of the world and be able to optimize their data? There's a reason they picked Palantir. They want to become more operationally efficient. They want to become more lean, and they want to enable AI. Also, it should give a signal to the market. Grocery stores need AI. Like, it's not just healthcare. We got 2 amazing healthcare partnerships this year, but it's not just healthcare. It's not just energy. It's not just defense. It's not just, tech companies that are utilizing AI. That, it's not just the Fortune 500 companies. It's a grocery store. A grocery store is like, hey, if we could save a couple $billion, yeah, we'll pay some money. I don't know how much they're paying for Palantir. I would imagine this is going to be a nice contract because it's 3 years and 3 years on a company that's worth $40 billion. We don't know how much the deal is yet, but it definitely does seem that this is a phenomenal partnership for Palantir. Now, in the context of earnings, for those that are just joining, we're talking about Palantir's partnership with Kohl's that they announced yesterday. I'm curious if Palantir has a crap ton of these deals lined up, and on the earnings call, Karp in his white tight t-shirt is going to bang on the table and say, we're going to grow 25%. If Karp does that, I mean, we're eating good. We're eating because it just means that AIP is working. Right now, we're still in this limbo phase of like, is it working? Is it not working? We kind of know it's working. We think the boot camps are working, but we have no numbers. Monday, we get the numbers. And even if the numbers for Q4 aren't good, that doesn't matter because guidance is ultimately going to be the core thesis for what determines how Palantir is going to be able to do. And if they guide that they're going to get a lot more companies like this AIP, then I think it's working, and it really is working. Thomas says, think about how much more grocery stores could save by using Foundry. 100% agreed. I mean, the amount of data that grocery stores and retail chains have to deal with, if all of that was more operationally efficient for what, 10 million a year, you can't spend 10 million a year on that to save millions, save potentially billions over the long term. It makes sense. It makes a lot of sense. And maybe $16 is the new $6 for Palantir. Maybe $16 is the new $6 for Palantir. Obviously, 16 has been seen as the artificial floor to the stock. I mean, the one time we dipped below 16, the dip was bought so quickly. I mean, we got to 1590 or 1567 in the pre-markets. We pumped to 1590, and then we were back at 1610 like it was no big deal. We have not seen the stock go below 16 since November 1st. November 1st was at 1480. This is how much I know Palantir, dude. I fucking remember the price. You can even you can like literally check me on that. Go to November 1st. The low is not 1480. I want someone to check me on that and tell me if I'm wrong. I think I'm right on that, which is crazy. But this is a big deal for Palantir. I think it's going to do really well. And earnings, you know what? I'm starting to get more excited. They released this before earnings for a reason. This was kind of like the little, hey, it's going to be fun earnings. Here's a little bone to play with. Now, if they come out and they say guidance is below 20%, the stock's tanking. It's going to tank really bad. I'm telling you right now, that's going to happen. We're going to go to fucking $14 if we're going below 20%. But I don't think that's happening. And so I think we should be okay. I think we should be okay. So not bad. Not bad at all. All right. So that was the Palantir update. We got the market opening in 4 minutes. Let's get an update on just where the market's at. Let's see how, for those that are also just joining, the jobs report was not really the best for the market. We added almost 120,000 more jobs than were expected. And as a result of that, the market is a little, is like, hey, is inflation really not leaving? Because you can't have these many jobs. Now, maybe you can have these many jobs, but that's not what the market necessarily thinks. We added more jobs in December and November than we're expected. We revised those estimates. So we are seeing a lot more volatility in the job market. It's not as cut and dry as people thought. Also, the JOLTS report on Tuesday, we added 280,000 more jobs in terms of its opening. So not only do more people have a job, there's more job openings. There's like 9.02 million jobs. So yeah, unemployment's not an issue, but inflation might be. And given what Jay Powell said, he said inflation's like pretty much dead. We're just waiting for the right data. So maybe unemployment's not going to affect inflation, but at least the market is perceiving that, right? And that's the issue in the context of how the market thinks of it. Truflation came out with a great study yesterday about deflation. I'm going to try to bring that up and we're going to read it after the bell. I didn't get to read it yesterday, but it was published on February 1st. I want to read through a little bit of that, but basically their argument is that maybe we're going to have deflation. Right now, Truflation's at 1.34%. Dude, it was 1.44% yesterday. So we'll see. Amit's dad, my son is unemployed. Yeah, pretty much. That's pretty much what he's gonna say. Amit, you realize as YouTube finance grows and all the Wall Street analysts have passed away, you will be part of the new wave of analysts on the media. Yeah, I mean, it's kind of crazy. It's really exciting because the thing about doing media on your own, and I think some people will relate to this, but when you're part of a big news company, you have the backing of a salary and a guaranteed level of benefits, and just like the expectation that if you publish an article or something, the Wall Street Journal, they're going to use their brand to pump the article, pump the video, etc. When you're on your own, I mean, the level of uncertainty you have is it's massive, right? It's absolutely massive. So in the context of that, it's just mentally it's a grind to keep going, to know that you can eventually reach some certainty and to show up every day. If you want to have a career in media, I said this many times, it is the most privileged job on the planet to have a career where you can get up and talk. And in order to sustain that type of a job, to sustain any type of media enterprise, whether you're making art on Instagram or you're doing YouTube finance, you've got to be so committed and you have to genuinely care about the audience. And I think that's why this channel seems to be growing. It's because, I respond to a lot of comments. I respond to a lot of DMs. I love the fact that I have a chance to do this. I mean, you guys know my story. I always wanted to be the next Michael Jackson. I ended up realizing I couldn't sing. And so the love I had for performing to me is manifested into these live streams where I get to perform every morning in something that I'm very passionate at, which is the markets. So to me, I just don't take it for granted at all. This is why I'm live fucking 5 times a day, because I don't take it for granted. This is just an amazing thing. And it's not really paying anything yet. I'm not really making money off this. I mean, you guys know my YouTube analytics. It's not tens of thousands of dollars a month, but I do think that eventually it will pay off as we just grow and grow and grow. And in the meantime, hopefully we build a really loyal audience and we keep this sucker growing. And one day we have a Palantir moment, and Palantir has a Palantir moment, and this shit actually shocks the world, not a PayPal shock the world. Ladies and gentlemen, it is 9:30 a.m. Friday, February 2nd. The stock market is now open. Wake your ass up. Here we go. All right. Palantir is 1625 as we open up the market, down just a little bit on the day, but not too bad at all. Here we go. S&P 500, 490. It opens up. The S&P should open up, in my opinion. Meta and Amazon were up a lot, so the S&P deserves to be up. Amazon, or let's go to Meta. Let's go to Meta first. Meta, 16%. 16%. Check on your wife. Check on your kids. And most importantly, check on your fucking call options if you got those on Meta, because those are probably up. In fact, we don't have any call options on Meta, but we're going to pull them up and just see the options chain and how much people are up today. Amazon, 169, up 6% on the day. So after I go through these stocks, we're going to put up the Meta option chains and see how much money people are making. Nvidia, 638. Apple's down 3.5%. We didn't get to talk about Apple. We'll talk about them in a second, but the TLDR, they're not growing. They're growing $2 billion a year. It's not enough for the street to be excited, and they guided $29 billion less than this quarter's revenue numbers for Q1 revenue. So $90 billion in Q1. They did $119 this quarter. The market's just not excited. Robinhood down about 1.79%. Super Microcomputer, you guys know we've been talking about this on the channel. Somehow, some way, this company is up 589. It's up 10% yesterday after hours. I don't know how the stock keeps growing. I don't know if there's some funds that are just pumping the crap out of it. I know it's one of the heavily shorted stocks on Wall Street, so maybe there's a short covering, maybe there's a squeeze. But Super Micro, I mean, they guided for $14 billion in revenue. The market cap's $32 billion. They have hardware margins, not software margins, about 15, 17%. It's not 70 to 80%. So I don't know why the street keeps giving them the multiple, but it doesn't look like it's slowing down, or maybe it's getting set up for a big fall. I don't know. But this stock was $318 on January 1st. It fell to 500 yesterday. Now it's at 589. It's just insane. Snapchat 1654. They're up because of Meta numbers. All the crypto companies are down. So crypto is having a bloody day. Bitcoin's down about 1%. So you got all of crypto being down. So crypto's down. What about fintech? Coinbase is down. Square is down. PayPal's down. SoFi down another 2.26%. SoFi is 20 cents away. It was $7.39 the day before earnings. It is now $7.57. Robinhood 1069. SoFi, I don't know, dude. I don't know. I don't know. Oh, real quick. We got Palantir 3030. That's Adam in the chat. Let me just say this publicly, guys, because a lot of people have been DMing me about where's Adam. I talked to Adam yesterday. Adam is just wanting to take a break off of social media, okay? There's nothing wrong with Adam. He's still fine. He's still bullish on Palantir. He has all of his shares. He's just taking a break off social media. Social media is tough. Sometimes you want to take a break. Sometimes you just want to, not post anymore. And so that's the update from Adam. Let me give you guys that update because he told me to tell you guys yesterday. He's fine. So for those that were wondering, where's Adam? Where's his channel? Sometimes you just want to take a break. He has a family. He has kids. He has real life responsibilities. So that is where Adam is. He's still alive. He's still healthy. Everything's good with Adam. Okay, Intel 4290 down about 1%. SMCI 595. AMD 174. Nvidia 639. Nvidia is up partly, I think, also because of Meta. Meta said they're acquiring as many GPUs as they can. And, maybe that's a stretch to say that's why Nvidia's up, but Nvidia's up 1% for a reason. And I think part of it could be that the market's like, oh my goodness, all this demand that Amazon and Meta mentioned in the context of AI, it's probably going to go down to Nvidia. Nvidia's PE is 51. AMD's PE is 47. Meta's PE is now 25. Wow. Their PE actually went down. Holy crap. Their PE went down because of the growth and because of the profitability, obviously. Meta was at like a 30 PE yesterday at 29, if I'm not wrong. Their PE went down. Okay, so what about Amazon? Amazon's PE went up. Okay, so they went from a 57 to a 62. The profitability was not as good. And they brought in $10.6 billion of profits. Last quarter is about $9.43 billion. So it's not like the profits massively increased, which means CapEx massively declined. But the street's still giving it the multiple. Now, if the profits were like 14, 15 billion, this PE would be at a 50 versus a 57. And it would probably be up at like 180 right now. But still, the street's pretty excited. Street's pretty excited about that. Mark says, unlike a Mitt, Adam has a life. Yes, exactly. Unlike a Mitt, Adam has a life. You guys are my life. You guys know this by now. You guys fucking streamed 3 hours of the earnings calls yesterday, dude. Like the process of streaming earnings call is making me listen to so many more earnings calls, which is actually good. I think it makes you a better investor if you can listen to this stuff. Except when the accounting gets up and talks and it's fucking an AI robot saying, we did blah, 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 blah. I'm like, yes, I can read. Can we just go to the Q&A, please? This is ridiculous. S&P 489. That's up. Nvidia 642. SMH, the semi ETF, is up about 0.6%. You're at 188. Let's look at some of these other playlists we have. Let's look at SAS. SAS is green. Some companies are red. Palantir's red. Twilio's red. Intuit's red. Adobe's red. Atlassian is red. Salesforce is green. Oracle is green. Salesforce has earnings next week, I think. Let's look at oil and gas. Oil and gas is, wow, red across the board. So oil and gas is red today, pretty much all of them. And let's look at banks. So regionals took a hit yesterday. Okay, speaking of banks, the reason regionals took a hit is because New York Community Bank fell 35%. By the way, how bad is New York Community Bank? New York Community Bank is down another percent. They fell about 35%. Okay. And as a result of that, there's been a lot of volatility in the regional banking sector thinking, hey, this is the first regional bank to fall 35%. Is this a Silicon Valley Bank type of moment? The Fed has ended their BTFP program. We talked about that a couple days ago. So there's not that much liquidity waiting for these banks. And rate cuts are not happening in March. So all of the losses from commercial real estate and AOIC loan losses that are on these books for the banks totaling more than a couple $100 billion, those are not going to come down at least by March, probably by May, because the Fed's not lowering rates. As a result of that, regional banks took a dip. Now, Truist took a really bad dip yesterday, but it did a nice little V-shaped recovery. And the reason for that is because as you can see right here, you see this V? It went all the way down to 35.19 from 38. So it dropped $3 and it came up. The reason for that is because they sold their insurance business. The rumor is for about $15 billion. They sold their student loans for about half a billion, and they sold their insurance business. So Truist is raising capital because Truist is like, look, we need to survive. Truist is one of the 7th largest banks in the United States. And in order for them to survive, they need to raise money, and they're getting rid of these assets that are not yielding as much as they would in a low interest rate environment. So I think Truist is going to be fine. They just have to hold out until the rate cuts. The rest of these banks are also taking a hit. KRE fell about 5%. They were at 53. Now they're at 47. Not a systemic thing in the banking sector, in my opinion. I don't think it's going crazy. I think one bank failing, like New York Community Bank. Remember, the reason they failed, we watched about this yesterday in the market close, is because they had a crap ton of apartments that they had to refinance, and they just weren't able to do it. They had a lot more commercial real estate exposure. So I think it's isolated to NYCB. Famous last words, right? But hopefully it's not isolated to the banking sector. Overall, I think the banks will be okay, but that's an issue right now with banks. Celsius is up about 1%. So you got Celsius up right now, which is not too bad. I mean, it's barely up, but it is up. Where's Google, by the way? Google? Damn, Google's. I did buy the Google dip yesterday, guys. I did buy the Google dip. I bought $1,000 worth of Google. So I bought the stupid dip. And ironically, the options are actually doing well on Google still. So I DCA'd into the spread. So now I have 9 of those spreads, which means if Google can get to, close to $200 I think by mid 2025, I think Google can get to close to $200. So I know the sentiment is horrible. The PE is 20. It's 20 for Google. I think Google is going to look at what Zucks did and said, you know what? Fuck it. We're giving a dividend. And I think they're going to give a dividend by the end of the year, and the market's going to be excited. Google's not going anywhere. They're going to meet their ad numbers. The election year is a catalyst. Like at a PE of 20, I don't think this is the time to be super bearish Google. I just don't. This is not like, it just doesn't make sense to me right now. So I think Google's worth buying the dip. And I think if it gets down to 120, it's a really buy the dip opportunity. And I think these money market funds, when they come into the market, they're going to go for the lowest value the deepest value max 7. And it's going to be Google. Unless we have a dramatic decline, Google will be the cheapest. It will absolutely be the cheapest. Maybe Tesla's really the cheapest, but Tesla's too risky, right? In the context of like people who have money market funds. So it'll probably go to Google. And I think that'll help. Where's Enphase? Wow. Enphase almost at below 100. Look at that. Enphase almost at below 100. Do you think NYCB is like another opportunity like TFC? Victor, that's a good question. I'm doing my DD because JP Morgan said, look, the 35% decline is stupid. We still have an $11 price target. There's not a structural problem in this bank, and everything's going to be okay. Now, I don't really trust JP Morgan. Okay. So I got to do my own due diligence. But maybe it is a TFC May 2023 opportunity. I would not advise anyone to go into it yet because when a bank falls 35%, like it's something to really look at. Could they go bankrupt tomorrow? Maybe. I don't know. I got to go through the numbers, but I'm going to be over the weekend looking at their numbers because maybe this is an overreaction, right? Maybe it's not that serious. And maybe when rate cuts happen, it does fine. But we'll see. The problem is they have a lot of commercial real estate exposure, and that's what fucks most banks this year. Truist has barely any, dude. Truist has like 4 or 5% CRE exposure. That's why Truist was such a bargain back in May 2023 when it got to fucking $27 because it didn't make sense at that point, right? So that's what we're seeing now on Truist. SoFi is down to 2%. SoFi is also down with the regional banks. Yeah, you're right on that. SoFi couldn't have produced earnings at a worse time, dude. They produced earnings and then a regional bank collapsed and SoFi's a bank at the end of the day. So that's bad. Look at Nvidia. Oh my God. Nvidia's trying to get to 650. Nvidia's trying to get to 650, dude. What is going on, dude? SMCI is at 593. They're up, but Nvidia's really trying to go for 650. It's at 647. Let's look at Nvidia's chart over the past past month. Let's do past 6 months. That'll be better. This is insanity, dude. It was 390 on October 30th. On January 1st, it was 495. It's at 647. So let's do some quick maths. Okay, 647 minus 495 divided by 495. That's a 30% gain in 30 days. Every single day, they went up 1%. Every single day. Every single day. Dude, that's crazy. That's crazy, dude. Absolutely crazy. AMD's running as well. Where's AMD? AMD. Oh, look at that. Wow. AMD is getting back all of its earnings drop. It's up 3%. It's like the earnings drop never happened for AMD. Look at that. AMD is getting those numbers. Adam said, me and you have picked the worst out of the Mag 7. Yeah, we picked fucking Tesla and Google, dude. Out of the thing that makes me the most upset about this, I'm so happy that Meta's doing well and all that stuff. Let's go to Meta, by the way. But you guys know how bullish I am about Meta. Meta's up 18%. Look at that. Meta's up 18%. Let's look at the option chains on Meta. If you guys go to my channel, I made a video of when I bought Meta at $325 a share back in February 2022. It fell to $240. I sold my Meta. I said, fuck it. Meta's, a dying business, all this stuff. And I bought Palantir at $12. Now, that wasn't a horrible little switcheroo, but I've always been bullish on Facebook, dude. I've always defended Zucks against, the Carloses of the world that hate Zucks. And no offense to Carlos, that's just it. There's a lot of people like him that think Zucks is the most evil person. Like, I've always defended Zucks and I've always loved the product. And I've said Facebook is a phenomenal business, but I never bought because the valuation ran away from me. And at $88, you're like, Amit, why didn't you buy there? I was buying Palantir there. And I got a little scared of, is Facebook's the next AOL? And I'll openly admit that was my mistake. I can't take credit for taking advantage of that dip because I wasn't, quite frankly, smart enough to take advantage of that dip. If I was smarter, I would have taken advantage of the dip. I wasn't. I was still naive. I'm still probably not that smart. But the point is, I should have bought Facebook because I actually believe in the company and I like the company and I want the company to do well. And it would have been such a great stock in the portfolio just to hold long term. But in September, I picked Google instead. And so, look, I think Google's still the best value opportunity right now. And I think if they can get the fucking company to just perform correctly, it's going to be okay. But overall, that is the allocation I went with. All right, you guys want to look at the options? Here we go. So if you had February 9th calls for $480 strikes, you are up 2,900%. Even if you said by February 9th, the stock would go to $590, which is crazy because February 9th is 6 days from now. The stock's not going to $590. You would be up 700%. 700%. Yeah, 700% right there. This is what I think people need to understand about options as well. If the Facebook's up 18%, if the underlying asset has a 20 to 30% gain, that more out of the money your options are, they're going to go crazy. Okay. Because it doesn't need to get to $590. You just need to sell this call before it expires. And if the underlying asset is up 20%, well, the options are going to do really well. If you had February 16th strikes on 485, you were up 3,000%. Meta's at 470 right now, right? Yeah. If you had a 470 call, you're up 2,000%. Okay. Now let's go to January 2025. Let's be more conservative. If you had Facebook's going to be $500 by January 2025, which is not that crazy, you would be up 146%. 146%. Let's go to January 2026. If you said Facebook's going to be $500 by January 2026, you're giving yourself almost 24 months. You would be up 80%. You'd be up 80%. This is, dude, a move like this, if you're playing the options market, you're up a lot. You're up a lot right now. Facebook right now, 472. Look at that. Look at that. Oh my goodness, Meta. Oh my goodness. It's just incredible. It's just incredible. Absolutely incredible. You just need to sell the contract to another dickhead. That's true. That's the other thing with short-term expiration. Let me see how many contracts are open for that February one, because sometimes there's not liquidity for that. So yeah, for example, the $480 call from Meta for February 9th, there's only 429 of those that were open. I mean, maybe a bunch of those sold off as the market opened, so maybe I'm getting a different number. But the Meta 475, there were 680 of those open. So there wasn't a ton of liquidity. Typically, the rule of thumb is you want to get into an option when there's at least 2,000 contracts open. So the February 9th 590 call, there was 90 of those open. So those 90 people have to sell them to each other right now. And I don't know if you're going to find liquidity there, But the January 2025 option for 480, that had 2,000 open. And look, you're still up 100%. So even though, yes, you're not up 3,000%, dude, I'll still take up 100% and have a year worth of, Facebook shit at the bed, a year worth of recovery. And if you hold this for a long time and Facebook doesn't go below 480, which right now it doesn't look like that's going to happen, you're going to do well. You're going to do very, very well in these markets because it'll just get to that strike price. Okay, cool. So not bad. That's what we got on Meta. That's what we got on Amazon. Billy Bag Donut says, Amit, I got an email from Robinhood wanting me to test out the new crypto wallet. Have you heard anything about it? I don't have a crypto wallet on Robinhood. I do know that they announced a crypto wallet. I would try it out if you're into crypto. I mean, so I saw a post yesterday on Twitter. Someone tried to exchange their crypto from Coinbase, like get it off the platform. It took them 8 hours. And they were so upset. And they were like, Robinhood took me like an hour. So I think Robinhood is becoming a player in the crypto space that is easy to use. Now they have cold wallets, which is what people were asking for. So I would try it out. If you're a big crypto guy, I don't have a crypto wallet. But if you have a crypto wallet, I would try it out and just see the experience. Maybe it's crap. Maybe it's good. But if it's anything like their other products, I think it'll be better than what people think. Meta 475 right now. It's up 20%. AMD is up 4%. Nvidia 650. Oh my God. Nvidia is 650. $1.6 trillion market cap. 7 million shares traded in the past 18 minutes. Nvidia is $650. SMCI is at 604. SMCI, like, this is just ridiculous. I mean, these companies are not slowing down. Palantir's up 1%. S&P's at 490. Amazon's 170. Where's Microsoft in all this? Microsoft's 409. Microsoft's getting back to their earnings level. Tesla's down 1%. Google's down 1%. And Apple's down 1.96%. Apple recovering a little bit. It was down about 3%. Wow. Adam says, dude, Coinbase made me wait 3 days and their fees are ridiculous. Yeah, dude. I think Robinhood's the future with crypto. They're never going to beat Coinbase because Coinbase's brand is too crazy. But Coinbase fees are stupid, dude. If you actually pay Coinbase fees, like, I don't know, dude. And maybe you just have a lot of money to spend on fees. But the fee to buy one Bitcoin on Coinbase is $450. On Robinhood, it's $110. Like, come on, dude. You're going to pay $450 to buy a Bitcoin? Like, get out of here. That's ridiculous. That's insane. So yeah, for me, Robinhood is the obvious answer here. Meta 473, Microsoft 409. The Mag 7 are not stopping, dude. They are just not stopping at all. Okay, let's talk about Apple. We haven't talked about Apple. Let's get Dan Ives talking about Apple. We haven't discussed their earnings. China sales were down. Services were up, but that was the only thing that's up. So let's discuss what's going on with Apple and kind of talk about why they're currently down. Here's Dan Ives talking about Apple.
Is this good news that Apple was able to beat despite a weak China, or is it bad news that iPhone didn't do better?
Look, I think they have headwinds, but they're able to navigate. And you look at the beat, and also when you look at the China number, you have to really understand what China did for iPhones relative to the other pieces. And look, the headwinds are well known, but if you look overall at these numbers and the margins, I think it's a massive step in the right direction. Now, it all comes down to the conference call and guidance, of course. But relative to, I think, a lot of the negatives coming in, I think this is important.
Paul Hickey, want to get your thoughts on that top line beat, 2% revenue growth. That breaks a 4-quarter streak of flat or declining revenue for the company. How important is that, especially if you look under the hood and you do have some beats and misses? It's a little more of a mixed picture.
Yeah, I think it's more of a mixed picture. I think that's probably the least important of the metrics that were just reported. If there was a company that needed a good quarter and a good reaction to earnings, it was Apple this quarter. The stock's done nothing for 6 months. It's, rallies have stalled out 3 times in the high 190s. And that China number, which everyone was watching for, that was weak. So that's something to be concerned about. But the one but here is sentiment towards the stock has been weak coming into the report. The percentage of sell ratings was the highest since the start of 2020. So analysts have been pretty negative on this stock relatively to its history. So not necessarily a great report here, but the conference call and guidance will be something that we'll be looking for and placing more of an impact on. The revenue growth, 2% growth, that's not much.
Can you pay the multiple you're paying for Apple for 2% growth? That is the problem right now. Apple's PE is 27. Does a 27 PE deserve that 2% revenue growth? Or does a 2% growth company deserve a 27 PE? I don't know. It's tough to say that is the case, but that right now is why Apple's down, and that's why they're struggling. A couple updates. I want to show you guys some different things going on in terms of different equities. So let me pull this up real quick, and then we're going to get back into these companies because I cannot believe they are doing this well. I want to see if there's a sell-off or if they keep going. And it's a Friday, dude. It's a freaking Friday. Snapchat's up 4% because Meta's advertising business has shown that advertising is not slowing down, and that's why the market's giving Snap the premium. Okay, Kathy Wood bought 47,000 shares of Robinhood yesterday and 24,000 shares of Tesla. So Kathy Wood bought the dip on Robinhood and Tesla. Robinhood has earnings on February 12th. So I think she's loading up a little bit before earnings. And then Tesla, obviously, she's continuing to buy the dip. And she bought 1.1 million shares of Rocket Lab. Okay, 1.1 million shares of Rocket Lab. 244,000 in ARKX, 929,000 in ARKQ. So she definitely bought the dip when it comes to Rocket Lab, and she was exciting for that. Let me show you this quote tweet that Holzmarg Catalog did. Let me just pull this up real quick because this thing sparked some discussion here. So this is what he said yesterday. So this was my tweet. Okay, this is my little GIF. I said Tesla shareholders are right now looking at Meta and Amazon, and then there you got the joke. And then Holzmark Catalog said 5-year returns: Meta 206%, Amazon 105%, Tesla 875%. He's not wrong about that. Tesla's up the most in the past 5 years. I guess the question is, if Tesla's up the most in the past 5 years, are the next 5 years going to be the same? And also, if 2 of those years didn't happen, because the last 3 years the stock's been pretty flat, you wouldn't have any of the gains really. So that's something to think about a lot when it comes to what's going on with Meta, or when it comes to what's going on with big tech versus overall Tesla right now. So that's what we're seeing right now. You're a Tesla bear. No, I'm not a Tesla bear, dude. I have the fuck. If I was a Tesla bear, I would have sold my stupid Tesla to buy fucking Meta and Amazon. But I have all my Tesla because I believe in Elon Musk. So that's what's happening. Holzmark Catalog. What was I calling him? Did I not call him Holzmark Catalog? What did I call him? Did I not know? Did I call him something crazy? Yes, Holzmark. Oh, I'm calling him Holzmarg. Is that what I'm calling him? Holmars Catalog. That's what I'm calling him. His name is very long for some reason. Fire in the hole. Thank you for the $2 super chat. Copying Congressman is great to make money. Yes, and that's another update that I want to give you guys right here. Copying Congressman is actually a great way to make money. If we look at Nvidia's updated portfolio, which I posted yesterday on X, this is why you should be following me on X, so you see this stuff immediately. Here are Nancy Pelosi's updated holdings. Here's what she's got in the portfolio. So Apple 25%, Meta, she has no Meta, Disney's at 1%, Nvidia's at 17%, Microsoft's at 21%, and Apple's at 25%. It seems like this is the portfolio that is performing really well. The only thing that's not performing well is Apple, but given her average, it's probably good. And remember, Nancy Pelosi bought about $2 million of in-the-money NVIDIA call options that are printing because NVIDIA is up 30%. Now, if it was out of the money, it would really be printing. She would be up almost like 300%. But they're in the money. It was cheaper than buying the stock, but she's up a lot. She's probably up 40% compared to the stock just being up 30%. So I don't know how Nancy Pelosi pulls it off. I don't know how she figures out how to buy, how to sell. But I mean, look, she got it right in the beginning of the year at the bottom, what looks like was the bottom for Nvidia at 450, 470, and she's up a lot right now. So Nvidia's doing amazing, and so is Nancy Pelosi. Now Disney is weird. She has 1% of Disney. She has a little bit of Tesla, which is great, but Nvidia, Google, Amazon, Apple, and Microsoft are the main holdings, and CrowdStrike for Nancy Pelosi. Now, hopefully that Google 14% holding comes into play. We need Nancy Pelosi to go into Congress and pass some stupid policy to get the stock to go up. At this point, dude, I don't care about corrupt politicians as long as I own the same stock as them. If we are on the same page, go ahead. Do what you want to do. I don't really care. As long as I make money too. Like, let me participate. If I make the money, I don't give a shit. But if you make the money off some corrupt shit and I'm not making any of the money, then I'm going to write a strongly worded letter to my local congressman and say we got to stop the shit. But if I make the money, then it's okay. So, as long as I participate in the corruption, that's all that matters. Amit, when is the next pod with TJ? Today, 6 to 7. Today we'll be live. His wife's car broke down yesterday, so we couldn't make it. So today, 6 to 7, we'll be discussing open interest and volumes for options. I think that Apple cutting their dividend is huge. Did Apple cut their dividend? Did I miss this? Apple cut their dividend? Really? Did that happen? Apple 24-cent dividend. I don't know if it's down. Someone tell me if that's true. Is that down? Because if that's down, then that is a reason why the stock is down as well. But I don't know. I don't know if that's correct. But right now I see that their dividend is at 24 cents. Let me know if that is down in terms of the yield. Meta 477. Meta's not slowing down, up 20%. Meta's trying to hit $500, dude. Meta's trying to hit $500. I mean, that's just crazy, dude. This is just absolutely insane. Nvidia 654. Nvidia's not slowing down. Google's below 140. Well, that's just great, Google. That's just great. Thank you, Sundar. Thank you. Phenomenal. You did great, Google. You did great. You let a guy who made a website to rank kids at Harvard based on how hot or not they are, called Face Smash. You let him steal the Harvard directory and build this stupid website in 2005. You let his company go up 20% on earnings, and you guys tank the bed. Thanks, Google. Thanks a lot. I mean, seriously, no, thank you a lot. Like, Sundar, you have just my utmost respect for letting the squirm that is Zuckerberg, who I have so much respect for, give his company $200 billion of market capitalization in 24 hours. And Google, you have lost $200 billion of market cap in 2 days. I mean, it's just incredible, Google. No one else could do this other than you, Sundar. No one else. You're just a great CEO. Phenomenal. And you're taking my money and you're dumping it in whatever stupid projects you're investing in. This is great. Good job, Google. But maybe I should have bet on Zucks over Sundar. Maybe I should have bet over Zucks on Sundar. Now, granted, guys, I'm being hyperbolic. Google, I think, is stupid. The market's selling it off for no reason. I think at 139, it becomes even more attractive. 135 is when it gets really fun. But remember, there is nothing fundamental to justify this. Just like in October, when Google missed on cloud revenue by 200 million and the market tanked at almost 15%, it rebounded, and it rebounded hard in a couple months, and it went from 120 to 155. There is no reason for Google to be down today. There is nothing in the call that was said. There is no number you can point to why Google should be down. This is expectations versus what happened with Google, and the expectations given that Meta did better on ads and then Microsoft did better on cloud is why Google's down. But this is what I call irrational market behavior. There is not a fundamental reason. Google is not overvalued. The PE is 20. It's about to go to fucking 19 if it keeps dropping. There is not a real reason for Google to be down, in my opinion. So we'll see what happens. Sonam says, let it out a minute. It's like my therapy session at this point. It'll be okay, dude. It'll be fine. If it gets down to 135, I'll buy it. I'll buy more. It's cheap. And this is what happens. And look, this is what happened to Meta shareholders when it went down in October. It went down to like 240, 250 for no reason after their earnings. And in October 2022, when it went down to 88. Now, Google's not Meta at 88, but irrational behavior going down after a stellar earnings, it's the same thing. And You just got to buy and hold, and remember that Google's not going anywhere. The biggest funds on the planet own Google. What's the selling that's happening is not institutional. It's all algorithms. That's all it is. The biggest funds in the world, the Saudis, the Bill Ackmans of the world, the Jane Street Capital, all these guys own Google because they know what the hell is going on at Google. These are just algorithms that are, playing around with the stock. I got okay. So Seeking Alpha said they cut the dividend by 1 cent on Apple. Okay. So if Seeking Alpha is not wrong, then yes, Apple did cut their dividend by 1 cent. And that is why, that is also why we're probably, I mean, that's not the biggest deal in the world, but a cut on the dividend and lack of growth. Yeah. You're going to see some volatility there, dude. Think about it like this. Apple's at 2.8 trillion. Meta's at 1.2 trillion. Meta is about a third of Apple's market cap. And Apple controls Meta's ability to sell their ads. Like without the iPhone, Meta would not be a thing, right? Facebook ads are seen on iPhones. Now I know Facebook is on Android across the entire world. I get it, but the most profitable users for Meta that have the ARPU are not the people that are named APU. Okay, the 17-year-old in India scrolling Instagram doesn't have that much disposable capital, but the 17-year-old in the United States has an average revenue per user of about $60. There's more money in North America, and we know that iPhones are used more in North America than Androids. So Apple's business is the facilitating framework for Meta to really be able to make the bulk of their capital. And now they're worth 33% of that business. That's kind of crazy to imagine that 1/3 of Meta's market cap is Apple. I mean, you kind of think if they keep executing and Apple keeps slowing down, which both of those things are happening, what happens when Meta gets to 2 trillion or 1.5 trillion and is officially 50% of Apple's market, and Apple goes down to 2.5 trillion from 3 trillion? I mean, this could be very interesting if Zucks creates a company that's on par in terms of market capitalization with Apple. Amit, what's your average on Google? It's about 135-ish. It's options, but if I have to equate the options to the pricing, it's about 135-ish on Google. So Farino says we have heard that joke 100 times, but it's still funny though. There are 812 people here. I'm sure there's some people that have not heard the APU ARPU joke. Okay. So if you're new to the streams, we made a joke 3 months ago, phenomenal joke, crushed on the market open, absolutely smashed. The whole audience laughed. And I was like, wait a second. What if we just do it again and then do it again and then do it again? And so we did it about 100 times. And some people got bored of it, but obviously it's a good joke, dude. ARPU, APU, who thinks of this stuff? Like, this is just pure YouTube finance comedian. This is why the channel is going to get big one day, because I don't think YouTube finance people have the level of comedy that I bring. Now, you guys hated the Squid Game joke, which I still desperately wish you guys loved that joke. That joke was like top 5 joke all time to me. But it is what it is. It is what it is. Things happen. And eventually we'll get back to another ARPU epic joke. Speaking of Squid Game, Netflix 563 right now, down about 0.66%. Meta 477, not slowing down. Nvidia 650, not slowing down. Absolutely amazing. Absolutely amazing. The Squid Game joke was so good, dude. Yes, it is. All right, I'm going to say it again. So let's use Nvidia as the context, okay? So Nvidia is up at 650, okay? It's up 3%. And fuck, how did I set up the joke? It was Squid Game. Damn, I forgot how I did the joke. It had to do with Netflix, but it had to do with Squid Game. I genuinely forgot the punchline. Damn. It was something about being wet. That was the punchline. Okay, I got it. Okay, so if I'm looking at Nvidia right now, and it's at 650, I'm like, wow, Nvidia's up 4%. And life is like a game. The stock market is a game. But seeing Nvidia gets me as wet as a squid, almost as if I watched Squid Game on Netflix. Okay, that was the joke, but I think I'm doing it wrong. But that was the ethos of the joke, and it absolutely crushed with like 5 people a month ago, and then everybody else hated it. But I know it sounded bad, but it was done. It was done better a month ago when I did it. It didn't make sense right now, but it was done better. It was done better, dude. You guys got to trust me on this. For those that are new to the market open, it was done a lot better. Can someone clip it, dude? If you remember, I think it was Netflix earnings Q2. If someone can find it, please find it. Because it was executed correctly. It just, right now, it wasn't that well. All right, here's Gene Munster on Apple. Here we go.
Check of tonight's big tech earnings. Fast Money friend Gene Munster has been listening into the conference call, has the key takeaways so far. We're just getting some suggestion, Gene, that sales will be weaker than expected for Apple. We did see the stock take a leg lower here. What did you hear?
Melissa, I heard you got to be really astute to how Luca gives this guidance. But basically, it implies that the street was a couple % too high for the March quarter. And effectively, what's gone on is there's this 13 to 14 weeks. I don't know if you remember this whole conversation about there was 13 weeks this year versus 14 last year. And analysts had expected that the growth rate should naturally accelerate in the March quarter, given our comparisons are 13 to 13 for this March quarter. And in fact, they're saying expect similar types of growth rates. And so when you kind of put all that together, that was the output, is that there's going to be some tweaks down in estimates. In terms of like the pace of the business, it probably slowed a little bit at December, because back on November 11th, the business was growing at like a 7% clip on a week over week basis, Lucas said. So I think investors are kind of filling in that gap. Luca also mentioned a negative impact of 2% from FX. And so whenever you kind of stir all this together and you talk about growth rates that are below the street, I think that is what caused shares to drop in the after hours.
He's right. Gene Munster is right. Obviously, the street expected a lot more growth than what Apple gave them, particularly for the March quarter. It wasn't really on this quarter. It was the March quarter. They're like, all right, they're going to get like 93, 94 billion. Apple said, we're only going to do 90 billion. That makes you revise your expectations, because it's like, dude, where's the growth coming from? They did 117 billion in 2022, 119 billion in 2023. That's only, I'm not the best at math, but 119 minus 117 is 2 billion. A company that has a 27 PE cannot be only growing top line revenue at 2 billion. The dividend is nothing special to get people to get invested into the stock. So what are you buying it for? Well, you're buying it for the Vision Pro. You're buying it for the future, which, by the way, is at stores right now, in the Apple Store. So if anyone goes and tries it and has their experience, let me know. So what's the reason to buy Apple, right? What's the reason? And I think that's why it's down. Now, granted, I don't think it's going to stay down for long. I don't think it's going to be dead money this year. I think it's going to be okay. The sentiment is so negative that eventually, things get a little more positive. Same thing with Google. But it does make you question, dude, if I had to pick one of the big tech, why would I pick Apple over Meta? Why would I pick Apple over Amazon? Like, I just don't know. I don't know what the real reason is. So we gotta see what ends up playing out and where it goes from there. SMCI 571, Nvidia. So SMCI falling down a little bit. SMCI is not at 600. Yeah, SMCI is red now. SMCI is red. Down 1%. Down 1%. We'll end it here. We'll look at some equities, and then we'll do Q&A for Friday, because we always do Q&A, and then we'll end it out. SMCI 570, Google 139, Apple 183, Netflix 563, Meta 472, Microsoft 409, AMD 177, Nvidia 650. So SMCI is falling, Nvidia is not falling. Let's look at Robinhood. Robinhood's probably taking a hit today. Robinhood down about 1.56%, 1074. And then Palantir, 1646.8% on the day. And then finally, S&P. S&P is, SPY is at $490, $20, up 0.20%. Not bad. Not bad at all. Robinhood 1075, Palantir 1645 on the day. All right, cool. So overall, green day. We'll see how things turn out in the next couple hours. But right now, the market is green. Pockets of it are red. Meta, obviously, phenomenal job. And we'll see what the market takes. And not only today, but in the coming month, as February tends to be one of the not best months for tech stocks. A couple of things, and then we'll keep going. Then we'll end it off on Q&A. So number one, I want to post this in the chat. I'm going to shout this out at the end of pretty much every stream. I have a new channel. You guys know this, called Macro Darts. To me, I came up with a vision for this channel. I want this to be the modern day CNBC, where, how CNBC pumps out like 50 videos a day. I think this is what Macro Darts can eventually get to. So please, if you guys want to subscribe to this channel, you don't have to watch all the videos, obviously, but there's going to be a lot of good clips here. I'm working with a new thumbnail guy, and the thumbnails, in my opinion, are really nice. I mean, I want all the feedback you can have on the thumbnails, but we're going to try to make it really, really cool thumbnails. If you're familiar with Breaking Points, that's a YouTube channel, kind of going off a Breaking Points vibe, and I want to make it really cool. So all of my interview clips, all of my clips from the market open, all of my pre-recorded videos on like the basics into options or, money market funds and discussing the implications of that, that's going to be dumped on this channel. And the goal is, hey, can we get this channel to 10,000 subs by the end of the year? I think it could happen. We'll see. But this is the channel that I'm not going to be afraid to post any videos on because there's no algorithm. It's kind of just like, let's just post like CNBC and let's just like see what happens, right? Whereas on my channel, it's more optimized. You can't just post a million videos because that's just not how it works. So make sure to check out this channel, subscribe to it, and we will get a lot more content on that channel. Second, we're going to do word of the day. And then I'll do a final Palantir earnings preview. Now, I have a video coming out today on Palantir earnings, and I'll be discussing that and the Kohl's partnership. So I'm not going to talk too much about it on the market open at the end, but we'll discuss that preview, and then we'll do Q&A for 10 minutes, and then we'll be done for today on the market open. If you're new here on the market open, every Friday, we do about 10 minutes of Q&A at the very end of the stream. That could be about anything, life, whatever. So we'll do that, and then we'll be good for today. Gift Magic says, just did the math on all my accounts, up 7 Gs today. Not bad. Incredible. Absolutely incredible. Mark says to name it the Virgin News Network. That is a mean joke. Okay, that's a mean joke. Word of the day: Weltschmerz.
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 This has got to be German, dude. This has got to be German.
Weltschmerz.
Sorrow that one feels and accepts as one necessary portion in life. Sentimental pessimism. Huh. Sentimental pessimism. It's almost like when I accepted that I couldn't sing. Like, it was sorrow, but I've accepted it was a necessary portion in my life. I had
Weltschmerz
around my music career. This is a really cool word, dude. The poetry of the Romantic era often captures the essence of Weltschmerz, invoking a poignant longing for unattainable ideal. The protagonist in the novel was consumed by Weltschmerz, finding solace only in the depths of tragic literature. I like this word. It's very optimistically nihilistic. That's not bad.
Weltschmerz.
Weltschmerz. So basically, if you accept something is inevitable and you're sad about it, but you know it's a necessary part of your existence, that's not too bad. It is German, world pain. Yeah, this is a cool world. That's how people feel about SoFi. That's yeah, this is how people feel about SoFi. That's it. Is this the SAT channel? Yes, this is it. We do word of the day, dude. And some of you guys will hear this word. You'll hear gully washer. You'll hear these words. It's the short but heavy rainstorm. You'll hear these words and you'll realize, holy crap, I know what they mean. I'm super smart. I listen to the market open. Not only do I learn about macroeconomy, not only do I learn about stocks, not only do I get this like just incredible amount of humor about these jokes about Squid Game, but I also have these words of the day. And so you guys will never stop watching the market open. That is the 4-pronged approach towards making the show the biggest show in the world. That's how you will feel to come about your comedy mitt. You guys really don't appreciate comedy, and that's okay. I understand not everyone gets it, but like, it's okay. You don't have to be jealous that you guys aren't funny. It's okay. Like, not everyone's meant to be funny, but I have zero Weltschmerz about my comedy. Zero. Absolutely zero. Okay, so what do we got to do for the next 15 minutes? We're going to do a quick counter preview. It'll be like 2 minutes. And then we'll do Q&A. So any questions you have in the chat, put it in the chat. But this is the end of the market open for those that want to leave. Thank you all for being here. It means the absolute world to me. We're doing pretty well, guys. Every day, market open, market close. It's doing pretty well. And it's growing. And I think it's fun every day. And I think people like coming back. So we're just going to keep this ball going. And we haven't even touched the surface of where this could be one day. And, one day when it's really big, the same people that are in the chat, I say your guys' names every morning. So I'm going to remember the same people that are here. So it's going to be pretty cool to see it grow, but we got to put in a lot of work, dude. YouTube is one of those things where it's so damn hyper competitive. I was talking about this with a guy yesterday who is actually making content for a company that we all know. He's one of their like content guys. Trust me, we all know this company. It's a very special, important company. And he was just texting me. He was just like, dude, like making content is fucking hard. Like actually putting it out, editing it, getting it out into the world. And he's doing that for a big company. And so he was just talking about, what I do with content. It's like, yeah, dude, it's very hard. It's very, very hard to do. But once you figure it out, you got to go all in. And then if you can go all in, maybe you can really go. So thank you to everybody who joined for the market streams over the past week and all the earnings streams. And that is it for the market open. We'll have Palantir Weekly tonight, 11 p.m. Palantir Weekly tonight will be 11 p.m. Okay, cool. I used gully washer the other day in a sentence and I got beaten up for it. Look, I can't help you if you get beaten up, but at least you use it. That's all that matters. Okay, Palantir preview. 2 minutes on it, real quick. Here's my TLDR on Palantir. Customer count, I expect to be from 453 close to 500. 485 will be okay. If we get to 500, that would be amazing. If we pull in 500 customers, that's going to be exciting. Revenue, I'm expecting 605 million. We guided for 602. We're probably going to do a little bit of a top line beat. If we get to 615, that would be awesome. Palantir tends to beat on these Q4 calls, so I think we're definitely going to beat. EPS, I expect $100 million of net income. It's probably going to be 3 to 4 cents of EPS, nothing that crazy. So that'd be $1 million in profit every day for the quarter of Q4. So we're going to be GAAP profitable for the 5th consecutive quarter in a row. That's revenue. That's EPS. That's customer count. Guidance. I am expecting 22% year-over-year growth. If we get 25%, that's phenomenal. If we get 30%, we're going to the fucking moon. If we get below 20%, we're going to not the moon. We're definitely not. We're staying on Earth. So I don't expect Alex Karp to be as cocky as he's been. Shyam Sankar doing the retail interviews as he's been to give us bad guidance. I really don't. And if they do, then they better have a good reason for that. I would imagine it's government growth, or I would imagine, in the back, they're sandbagging massively, and we can see in the customer count, hey, even though the customer count is going up, they're sandbagging on the revenue because maybe they're not pricing AIP yet, maybe they're not monetizing, maybe they want to wait for a little bit before they revise guidance. But I think in order to protect the stock, Q4 has to have good guidance, and if we have good guidance, then we're going to be okay. We're going to the gully washer. Yeah, exactly. So to me, ultimately, I think that if Palantir shows up on guidance, we're going to win. And if they don't show up on guidance, we're going to lose. It's going to be pretty cut or dry because we're not going to get some massive government deal. We're not going to get a share buyback, in my opinion. We're definitely not getting a dividend. We're not going to get some crazy Israel contract that they're going to say, oh, we got $50 billion. Like, no, that's not going to happen. It's going to be commercial AIP customer conversions leading to top line revenue growth and guidance for the full year. And the way Karp has been speaking about AIP, I think he's really, really bullish. My average is 15 on Palantir, Parish, 15. And because I think he's very bullish, it's going to be good guidance. I'm not doing an earnings play or an options play on Palantir because I literally don't know. I have no idea. So to me, I'd rather just hold the stock. If it goes up and the company is supposed to be worth more, we'll buy more. Like, again, guys, this is a company to me, I think is going to be, people are going to think I'm crazy, but I think it can be $200 to $250 by 2033-ish, 2034. Okay. So whether you buy it at 15, at 20, at 16, at 18, it's not that big of a deal. However, the reason I've been so keen on saying, oh, I want to buy at 15, like big buys, is because the growth is not there to justify buying it at these levels. And so you can make a predictive statement that the growth is going to be there, but then you're really gambling buying it at 16, 17. Because at 16 and 17, the growth is just not there. And this is not me saying it. This is CodeStrap saying it. Okay. So when CodeStrap says something like, hey, you can't justify the valuation, and this is the guy implementing the damn software for these high-level clients, you have to take him seriously, right? Because he's looking at the growth. He's looking at what's happening as well. Now, if the growth is justified at 20 to 35%, 35, 30%, whatever, then I don't really care if you're buying it at 20. I don't care if you're buying it at 25, because if you think the stock's going to 200, it doesn't matter. Does it really matter if you bought it at 15 versus 20 if the stock's going to 200? No. But you can't really say the stock's going to 200. That's just like my fantasy right now if the growth isn't there. And so far, the growth's not there. So I'm not willing to be super predictive, given I already have so much of just like, oh, I think it's going to, grow at 30%. So I'm going to buy it at 16, because if it doesn't, then the stock goes to 14. And those are precious dollars I could have got buying it at a cheaper price. So to me, this is what we got to figure out. Bay Ray says, Amit, you're going to miss the opportunity to buy at these prices. No, Bay Ray, I'm not going to miss the opportunity to buy at these prices. First of all, we have to stop that mentality, dude. When someone already has a position, they don't need to buy at these prices. They already have a position. They don't need to make their position that massive and buy more at these prices. Second of all, you don't know if Palantir goes up to 20 and then falls back. I was actually talking to Sachin last night. I talked to a lot of people, about Palantir. I talk to at least 5 or 10 people every day, and I'm not joking when it comes to Palantir. Sachin is doing a lot of option plays right now for June of 2024. He posted this publicly. That is based on Palantir rallying and then falling pretty badly, because he also understands the price action. So no, there's not going to be any missing of buying of price action here. This is, hey, let me see the company perform and get the numbers before we get super excited. Shout out to CodeStrap. Thank you for being in the chat. CodeStrap, we were just talking about you in the context of Palantir and growth, which is CodeStrap said this publicly on Palantir Weekly about a month ago, which is they need to have an Nvidia-like year. They need to show the numbers. At this point, the valuation is stretched, dude. Trading at 15 times sales, you can't do that as a SaaS company growing at 17%. It's just not possible. It's just not possible. So and this is the one thing that I'm actually very happy about as myself as in the Palantir community. I'm not a delusional bull like some of these Tesla guys that say the company's going to sell 20 million cars in 5 years. Like, the one thing I'm so happy about in the Palantir community is that we're not delusional. We're actually very level-headed. We may have, our jokes and we play around with carp and we have these memes, but we're not fucking delusional. That's the one thing I hate. So Bay Ray, when you say you're going to miss at these prices, it sounds more delusional than not. We cannot have this community become delusional. We have to look at the numbers. We have to understand the growth. We have to understand the bear case because stocks go up and stocks go down, dude. Palantir could easily fall to 12 or 13 on bad guidance because the company just doesn't have the momentum to be able to sustain that type of valuation. Now, I think the dip will get bought if it gets, anywhere close to 14, 15 bucks because there's so much appetite for this company from retail and institutional. But it is overvalued given the growth. And I think CARP will change that on Monday. I think they will. But if they don't, then buying at 16 is not a good deal. It's just not. Buying at 20 was not a good deal given the growth that they had. If they show the growth, then buying at 20 doesn't fucking matter because you think the company can be worth 100. So does it matter between 15 or 20, 16 and 17? No, it really doesn't matter. But they have to prove that to us. You shouldn't be taking the risk if you already have a position to like, oh, I think they're going to grow, so I'm going to buy the stock right now because it's cheap. No, the company should prove, hey, we're growing. Our stock is going to be cheap, even if it's a little overvalued right now. And it's always going to be a little overvalued, but because of our growth, you should buy the company. That should be the implicit tone of the earnings call. And that's when you buy the stock. But we'll see what happens. We'll see what happens. Bayer says, Amit, you track the company enough to have confidence the growth is here and guidance will be good. Let me do the basic numbers right now. AIP did 300 boot camps in Q4. Let's be generous and assume a 10% conversion. That's only 30 customers. This is the stuff I'm saying that, yes, I track the stock intimately and I know these things intimately. You've got to track the stock as well and try to understand if they only did 300 boot camps and conservatively, optimistically, they get 10% of those. That's 30 customers. Let's say they get 15%. All right, you have 40 customers. That's not moving the needle in terms of monetization or growth, right? And so now you get 50% of those, you have 150 customers. Okay, yeah, like the stock's going to 30 bucks. But are they getting 50% of their clients on the AIP conversion? I don't know. I don't know if that's happening. I would assume that's probably not happening right now. So yeah, I think I understand the company very well. I think I understand the client conversion very well. I think I understand the numbers better than a lot of people. And the only way I think Palantir is massively undervalued right now is if the DoD starts spending a shit ton more money on AI and machine learning. Because that means more government contracts are coming down the pipeline. Right now, though, the U.S. government, Shyam Sankar tweeted this, spends 0.002% on AI and ML research. Until that goes up, which let's say goes up by a factor of 5, that means you got about 10, 20 more $billion over the next decade entering into the ecosystem. How much can Palantir capture? I think they can capture a decent amount of that given they're the star players in the space. But that's not an investment thesis you can have before earnings. That's just not, right? So I think it's really, really important to be level-headed about Palantir. We should not be delusional about Palantir. Most of us here, I know I have a $15 average, but most of you guys here that found my channel in March, you guys have a phenomenal average. You guys have a great, great average. You're at $7, $8, $9. You found it at the lowest peak. And so you have a great margin of safety. There's no reason to massively increase that margin of safety if the company hasn't proven that they're willing to grow. And this is the objective part about being a shareholder that people don't want to hear. There's sometimes people on Twitter get on me like, you're too bullish on Robinhood versus Palantir. I'm like, no, you're just a fucking idiot. Like, that's what you are. Like, there's something called valuation. When Robinhood's market cap is half of cash, you can have your thesis about the company. But in terms of valuation, when PayPal is buying back almost 7% of the entire company in buybacks, valuation is different than the thesis. My Palantir thesis is I'm holding this stock for the next 10 years because I believe in it so deeply. Right? I understand the nuances of the company so deep. I'm not holding Robinhood until 2030, but Robinhood is a way better trade right now than Palantir because it's trading at just ridiculous levels. So if you can't be objective enough to look at valuation, I don't think that's the healthiest thing when it comes to being a bull on any company. Same thing with Tesla at 414, the valuation wasn't justified, right? So this is important. This is very, very important. And I think it's incredible. I think it's incredibly poignant for people to actually care about these valuation numbers. And all these numbers change in Q4 if Palantir has good guidance. And so we'll see. We'll see what ends up happening. All right. So that was more than a 2-minute preview on Palantir. Let's do 10 minutes of Q&A. Any questions you have in the chat, questions about Palantir, questions about life, questions about stocks, we'll do that. I love doing this Q&A every Friday at the end of the market open. We make sure we always have to do it. And we'll keep going from there. Kelly just texted me. She said, you just called me an idiot. I heard it. No, Kelly, I didn't call you an idiot. There's other people, though, on Twitter that get so upset about Robinhood and PayPal versus Palantir. Kelly has a better average on me than Palantir. Kelly has a $12 average on Palantir. So Kelly had a post, though, of like, if you had one stock, what would you buy? And I said Palantir. And that's when she commented underneath it last week. I think it was the last Friday where she was like, oh, but you're so bullish on Robinhood. Oh, so that's why you're calling. No, Kelly, that's not why I'm calling you an idiot. I'm talking about other people. You just asked me an innocent question. I'm talking about other people that like actually get upset at people for talking about other stocks other than Palantir. There's people on Twitter that legitimately, this is the part of the community that's very toxic. You talk about Robinhood or PayPal, there's people that'll be like, oh, like, why are you talking about these companies? You should only be talking about Palantir. They're the future. They're the modern operating system for the enterprise. I'm like, yeah, motherfucker, I know that. But like, you can talk about other things. It's Twitter, right? Like, it's okay. Those are the people I'm talking about. I'm not really talking about Kelly, who asked a nice question. Okay, so let's get to Q&A. Is SoFi legit? Yes, but the street doesn't like the stock. SoFi's legit, but the street doesn't like the stock. Let me pull up YouTube Studio. I have to timestamp this. I just exit out of it, dude. I don't even know if I saved the other timestamps. Damn it. This is creator shit. This is creator problems. Did I save the timestamps already? Did I save them? And I did. Let's go. I saved them. I don't have to go back into the video and find the timestamps. There we go. I was about to say tramp stamps. Okay. Q&A. Here we go. All right. SoFi is legit, but the street doesn't like them yet. That's the problem. Robinhood has no moat. I respectfully disagree. Benny says, okay, Amit, I have a question. You say buying at 15 or 20 won't matter when it's 200. So why is it 16 or 12? Well, but remember the latter part of your question, when it's 200, if it gets to 200. And my question is where the growth is going to justify. So the simple answer to this is that if Palantir comes out tomorrow and says we're doing 30% growth, I think, okay, they're going to be $200 in the next 10 years. I'll buy it at 16. I'll buy it at 20. I'll buy it at $12. Really doesn't matter. If Palantir guides for 18% year-over-year growth, then $16 or $12 really matters. 15 or 20 really matters because then the stock's not going to 200. If you do like basic DCF projections, the stock's maybe getting to 80, $90. That's when it really matters. So the question is the overall growth for the stock in comparison to your entry price needs to have a massive margin of safety. And if the growth is down, which means the overall price for the stock potential goes down, the upside goes down, then your entry price starts to matter a lot more. Okay. Matt says, can you please watch Tanner and Tevis's episodes with Celsius so you can at least understand the bull case? No, because Tanner and Tevis's episodes are very boring. I'm sorry. I got to throw a shot at them. I tried watching one of their episodes before, dude. It's boring. It's like, it's not entertaining. But Matt, if you have another Celsius episode that's interesting, send it to me. To be honest, Matt, I don't need to watch a Celsius bull case. I've been talking with Chris privately. We've been texting a lot, and he's been giving me a lot of DD about Celsius. And I'm excited for it. The problem is, I drank the damn thing yesterday and it's disgusting, dude. It's really bad. So on the market close today, I'll be drinking more of it. I have another flavor and I'll try. But if I buy Celsius, it's not because I like the Celsius. It's trash, dude. It's because these girls on TikTok keep fucking drinking Celsius. TFC is up 0.34%. TFC is up. KRE, the regional banking fund, is KRE up? KRE, I think KRE is up as well. Yeah, regional banks doing a little bit well right now on Friday. Okay, not bad. So yeah, in the context of Celsius, I think it makes sense. You know, Chris's DD on his Patreon makes a lot of sense. I'm not buying yet, but the drink itself sucks. But by the way, I'm just kidding about Tanner and Tevis. I'm just kidding. It's an ongoing joke where I call them boring. You guys know I call the SoFi Weekly boring. The ongoing joke was I'm the only thing that made SoFi Weekly exciting, quite frankly, because it's very boring. But SoFi Weekly is still a great podcast. It's fun. It's just, dude, Tanner is a very different guy. People watch Tanner for a different reason. He's not as over the top and entertaining, but he's really good on like just pure data, I guess. And so that's the running joke I have with him. With that, he's more boring. I'm a little bit more eccentric, I guess you could call it. Real Baby Pluto says, I thought I was the only one. No, you're not the only one, dude. When I left SoFi Weekly, I got like a trillion comments saying, dude, this is boring. I still watch it because I care about SoFi, but it's boring. It is what it is. It's fun, dude. SoFi Weekly is, they're getting a good groove, especially with Roy, now Crossroads, joining the channel. And Steve actually makes it very entertaining. I don't watch it often, but Steve's there, so that helps. But yeah, for me, I just don't care enough about SoFi in the context of being able to talk about it for an hour, which is why I always came up with it. Like look, SoFi earnings, the stock went up to 945 and now it's down. To me, what are you going to talk about for an hour? You're going to talk about how the EPS estimates sucked for the next 2 years, and that's why the street downgraded it. So that's what you have to talk about. But with Palantir, there's like a billion things to talk about, right? So from a content perspective, it just stopped becoming fun to me. And on top of that, I got so busy. So that's why I ended up making these stupid jokes on the podcast. Because I was like, all right, I remember once in October, we had nothing to talk about. And I just made some random joke and I tried to make a conversation. Because it's just tough, dude. When there's not a lot of content on SoFi, it's tough to make content on it. Amit, how many Palantir shares? 3,000, $15 average. It's like 3,040, 3,050. It's let's just call it 3,015 average. They had a Celsius bull as a gas. All right, I'll check it out, Matt. But again, I don't need to be sold on Celsius anymore. I mean, I get it. I understand the growth. I understand the TAM. I understand the opportunity. I don't know if I really want to make the bet yet. I'm still reading the DD to really, really come to the conclusion. The drink sucks. I'll tell you that. The drink is absolutely disgusting. The drink was horrible. So we'll see. How many shares do you want? I would like to get to 7,500 over the next 5 years. That would be nice. 5,000 by the end of 2024 would be really cool. So another 2,000 shares. We'll see, dude. If this Robinhood position plays out really well, which okay, so I'm going to reveal my Robinhood position because you guys don't know how much I have in Robinhood. I'm going to reveal it the day of earnings or like the day after earnings because they do it after hours. And let's just say if Robinhood pumps, I'm taking out my initial capital and you guys are going to get upset at me for how much I put into Robinhood. You're going to be like, how could you be so degenerate? But I'm going to get the initial capital back, and all of that initial capital, I'm going to dump it into Palantir. Now, hopefully, I mean, we'll see what Palantir stock price is at. Maybe it's still at the same range. Maybe it's pumped after earnings. Maybe it's a little bit down. Hopefully we get it at a decent price, but I'll DCA into Palantir. The goal is to take that initial capital, throw it into Palantir, and start getting that share count up even more. But Robinhood's got to pump. And I think it's going to pump, dude. I'm going to be so wrong on this if it doesn't pump, but I don't think we're going to $7. I think we're going to fucking 13. I think we're going to 13 or $14. I think it's going to fucking pump. And somehow I think they're going to squeeze out GAAP profitability. And if they squeeze out, because I was thinking about it last night, Robinhood became a GAAP profitable company 2 quarters ago. The only reason they weren't profitable last quarter was because of a regulatory fine. Why would they not want to be GAAP profitable? Like, why would they not want to grow profitably? I know they're doing this whole IRA match and they're spending so much to get a customer onto the platform. And if they spend so much to get a customer, they have to give so much in interest. So that's going to reduce their bottom line net income. But I think they thought about this 7 months ago. They knew they were going to do this. It's not like one day they woke up and they're like, all right, we're going to give a 3% match. They knew this was going to happen. And they are probably figuring out different parts of the business that they can cut to make or increase to make sure they sustain GAAP profitability. Again, last quarter, they would have put up 19 cents of GAAP profits if they didn't have that regulatory fine. If they squeeze out GAAP profits and they show their growth, I think the stock hits 14, 15. I really think it does. So we'll see. And that's why I think Kathy's been loading as well, dude. I think the DD on Robinhood is deep, and I think they get there. And I think the stock's been depressed for 3 years. It's been in a channel for 3 years. At some point, it breaks out, especially in this accumulation phase. And I think Vlad knew that they were going to be GAAP profitable and continue to grow this way. And if they're only not GAAP profitable because of some other regulatory thing, then I don't think the street's going to care, because the street's going to be like, all right, well, you guys, what other 2021 IPOs are profitable, dude? I mean, Robinhood is like, that's a hell of a statement for Robinhood to actually be profitable. So it'll be exciting. We'll see what happens. I have calls and spreads, Bryant. I have a lot of calls and a lot of spreads. Like, we're talking about hundreds and hundreds of calls and spreads. Like it's a lot, dude. It's a lot. So that's gonna be a big earnings, and we'll see what happens. Yeah, it's hard to talk about SoFi philosophically. Yeah, it is hard, dude. That's the other thing about Palantir. You guys know I'm so philosophical, and the discussions we have on Palantir Weekly and I have on the channel, it's just I don't get turned on by SoFi, dude. Like, my dick doesn't get hard when I think about SoFi. But when it comes to Palantir, or when it comes to Kelly, no, I'm just kidding. When it comes to those two things, yeah, I get more excited. That's all I'm going to say. Dr. Fields, your green in structure, says the strikes are 15 and 20. Brian, the strikes are 15 and 20. So $15 strikes, $20 strikes. 2025 and 2026. Dr. Green Instructor says, what advice would you give to someone trying to get started building a YouTube education channel? Okay, so, okay, YouTube education. So in the context of YouTube in general, I don't think it's not about education. It's not about finance. I think it's about community. And I know that's such bad advice because it's like, oh, this generic term about community. I genuinely think the reason I could have a sustainable career in YouTube is because I fucking love the community, dude. And I love everyone in the chat. I love interacting with you guys. You know, I think there's a shared interest, and I just love this shit, dude. This is like the best job. By the way, Ginkgo Bioworks down $1.20. Goodness great. This Kathy is probably going to buy 100,000 shares today. I just love the interaction of building an audience. And I think the one thing, and I don't know when this happened, I don't know how I thought of this, but I feel like I've seen so many YouTubers ignore their audience and not care about their audience. And I just never wanted to take that opportunity for granted. I think it's about gratitude. Like, for example, so this advice will make sex. This is what happens when you think about Kelly. Will make sense in a second. Okay. I was dropping my sister off to the airport the other day, and we were it was the Newark airport. For those that don't know about Newark in New Jersey, not the best area. I grew up in Newark. I went to school in Newark. Bad poverty rate, bad crime. Newark, New Jersey is kind of, think of it like Compton, California, even though Compton's like a little bit more aggressive. But Newark, New Jersey is it's a tough spot in Jersey. And I went to high school there. That's also where I get like a little bit of my edge, my competition. Like, dude, when you get called a terrorist in 7th grade, like that's not happening in the suburbs. That's happening in Newark. And then you have to defend yourself and shit. Like, you know, you gain a little bit of an edge, right? So we were there. I was dropping her off at the airport. My sister actually went to Morocco. She's coming back on Saturday, which is tomorrow. And I probably have to pick her up in the airport tomorrow. And so when we were driving at the airport, when we go through Newark, it's not the best area. There's a lot of homeless people there. Okay. And there was this homeless woman who's, while we're in traffic, while we're at the red light, she's just like has a bucket with her, and she's just like asking for money. And I have $10 and I have $5 in my wallet. And I'm driving, and my sister's like on her phone, and I tell my sister to open the window. And in that split second, I knew I was going to give her something, and I took out the 5, and then immediately I was like, no, let me take out the 10. And I was like, give this to her. And I gave that woman $10. And so why does this matter to YouTube? I think if you are lucky enough to be able to eat dinner and to do the things that you want to do in life without, you know, being poor or broke, or, you know, I'm not saying I'm the richest guy in the world, but like if you can't give up $10 to someone who is on the street, who's asking for money, like to be on the fucking street in the middle of traffic to ask people for money, you got to be in a tough life position, in a very tough life position. And in that moment, I think between 5 and 10, the reason I picked 10 is because I felt like just a horrible person giving 5. Now, most people will be like, oh, well, at least I'm giving something. But in that scenario, is there really a fucking difference between $5 and $10 to me? No. Is there a difference to that person who can probably get another cheeseburger from McDonald's versus like a Happy Meal? Yeah, there's a big difference there. So what does this mean for YouTube? I think there's a certain level of gratitude you have to have for the people that are in the audience. Gratitude means you respond to them, you talk to them, you message them, right? You interact with them, right? You actually engage with them. And some of the people, you know, their argument is, you know, that woman would just go buy drugs. So why did you give her the money? You're just feeding into that narrative. Look, maybe she did go buy drugs. Maybe she did just take the money, and maybe she has a ton of. The point is, it's not about what that person does with the money. It's about the intent of the human being. Maybe someone subscribes to your channel and they never watch your videos again. Maybe they leave some negative comments. The point is, are you doing the best you can to cultivate a community that is actually responsive and engages and cares and is grateful that you're willing to interact with them? And are you grateful that they're interacting with you? I think if you can do that on YouTube, whether it's education, finance, sports, fucking ASMR, energy drinks, it doesn't matter. If you do that, then that's how you build a successful YouTube channel. Now, Michael Wilder says, what do you do when there's one on every corner? That's a good question. I don't have unlimited $10 bills to give to every single person on the quarter. I'm not rich like that. Now, one day, if I get rich, I'm going to fucking give out a lot of money. Because, dude, like, if I get, that would be the best sort of philanthropy. I don't want to give it to the fucking American Red Cross organization. I want to give it to real people, right? If I actually get rich. But yeah, you can't control that. You can't control that there's a homeless person on every corner, but you can control that the first person you see and you have some money, you're willing to depart with a little bit of that capital. That's it, right? And so to me, it's about the intent. And when it comes to YouTube, I genuinely think this is the advice. It's not just about thumbnails. It's not about titles. There's also that's like the granular stuff of how to get the algorithm to respond with you. But if you go live, you build an audience, you do that consistently, and you get people to actually care about you, I think that's how you win on YouTube. And it's tough. It's not easy to do, but I think that's the way to do it. So that would be my way. Look at Robinhood. What is Robinhood up or down? Is Robinhood up or down? Robinhood is 1087. It's not too bad. It's down 0.3. Well, it recovered from 1065. Okay, so it's up a little bit, but not too bad. My mom asked me this when I was young, and I would do this all the time. Yeah, like at the end of the day, dude, it's something that I think is important. Now, look, when I go to India and there's there's literally 10,000 homeless people everywhere you go, every street corner, you can't give up that much money. And when I was in India, I would give out as much as I had. Like my mom would give me money and I would just give it away because I just genuinely, I felt bad, dude, when you're seeing a 3-year-old kid asking you for food in fucking the slums of India, and you think of yourself from America, you have, you can buy a cheeseburger. Like it just gives you context, dude, that this world is fucking is divided and there's a lot of inequality and you can't change the world. And I'm not saying we have to raise taxes and shit. I'm just saying, can you be a little bit more altruistic? And I think that's what matters in the context of YouTube as well. So that's important. And final advice, you got to be consistent on YouTube. If you're consistent, everything matters. Intention is everything, as Ty Gordon says. And if you're consistent, that's the other thing. You got to be there every day. Like some people, this is why I get mad at some people on YouTube. Like I had a friend who was like, oh, why are there only 140 people here in the stream? And I'm like, you're never going to win, dude. And you know what? You don't deserve to fucking win. Like that really pissed me off when he said that. Cause I was just like, you don't deserve to win. You don't. Like take your ass, like go somewhere else. If you're not grateful for 140 people spending their time with you, like you're not going to win. You don't deserve to win. You don't deserve any audience. You don't deserve any credibility because you actually think you're entitled to the 16,000 people that Meet Kevin has on his live stream. Guess what? Meet Kevin did a lot of work, a lot of fucking work to get there. And so if you're not willing to put in that work and be grateful for the people that are willing to even be there, get the fuck out of here, dude. You don't deserve an audience. And the people that are entitled to this shit, it's just like, it's disgusting, dude. It's like I think that's the thing about me that I don't know. Maybe my mom raised me with a lot of gratitude. I am so fucking grateful that people take the time to consume. Because I think if you have a career in media or entertainment, people actually consuming your content is the only thing a creative really cares about. And at the end of the day, I think I'm more creative than I am entrepreneurial, quite frankly. I think I'm pretty good at understanding business and entrepreneurship. I'm not saying I'm the best entrepreneur ever, but I think like I can understand how businesses work, and I love analyzing businesses and stuff. And I'm trying to build, my own bit. But to be honest, I've been an entrepreneur my whole life. I started my consulting firm. You guys know that. That's printed a decent amount of money for me. It's paid off all my bills. It's given me the money to invest. Like I've never had a job ever. I've never worked on a what do you call it? A W-2, like, or whatever. Like I've always had a 1099. I've always been a contractor. But as a result of always being entrepreneurial, I feel like my creativity is what allowed me to be entrepreneurial. And so from a creative perspective, the only thing you care about is, are people consuming your content? Like essentially I'm an attention whore is what I'm trying to say. I'm an attention whore. And that's not a good thing or bad thing. That's just, hey, you really crave people's attention. So it could be a bad thing if, you become super sensational. I think I was raised correctly to not be, just like insane to get people's attention. But it's if you're an attention whore, do you care about people's attention? Do you care about sustaining people's attention? And if you care about sustaining people's attention, that means you actually have to give a fuck about the people that are consuming you, which then creates gratitude. That creates, happiness that they're actually consuming your content. And genuinely that makes me happy. And so then from the business side, all right, how do I fucking build this shit? And then you get into like, all right, I can be strategic. The thumbnails, like I'm going to make this into bit, like we're going to build segments in the show. That's when you get, I'm going to do chapters in the YouTube video, because then people will easily be able to consume the content. That's when you get bigger from a business perspective, but from a pure creative perspective, I think I just want people to consume the content and enjoy it. And that's it. But the bad jokes. Now, see, here's the thing about what you say about the bad jokes, Impasta. The jokes that I do on my stream, I had a dream about 3 years ago of being a stand-up comedian. I even have this book where I wrote stand-up jokes, and they're not that bad. Like they're actually not that bad, quite frankly. In my opinion, they're actually quite stellar. But I don't think I'm ever going to become a real stand-up comedian. I don't think I'm going to have a Netflix special. I don't think I'm going to be in Madison Square Garden. So this market open stream, you guys get the benefit of my comedy because I can't go on Madison Square Garden and be comedic. So in a way, I get to use you guys to live out a dream that I know that I have Welchmetch about, because I know it's not going to happen. But I also know that this platform gives me the ability to live out that dream. So really, the jokes are a manifestation. And that's another reason why I'm so grateful, because I always wanted to be a stand-up comedian. And now I turned into a YouTube finance guy that is a stand-up comedian. That's what it's going to say on the LinkedIn resume. So that's why the Sunday says, oh, wow, we're so lucky. Dude, that's why imagine in 2 years when the live stream gets bigger and there's like the channel grows and there's like 5,000-6,000 people potentially one day, hopefully, God willing, let's say that happens. And I drop some of the joke, like I drop the ARPU joke in front of 5,000 versus 500 people. I just like, to me, that turns me on. Like, to me, the idea of doing that, it's exciting. It's super exciting. So thank you guys for letting me live my dream. That's it. Unpopular opinion. Amit says bad jokes on purpose because he knows it'll attract more attention than a good joke. Benny, I literally wish this was right. I genuinely think my jokes are good, dude. Like, you could ask Kelly, like after I make a joke after the market, I'll text her, be like, yo, what'd you think? And she'll shut it down. She'll be like, no, you fucking loser. That was a horrible joke. I don't even know why. Like, you try. Like, she'll degrade it. But in my heart of hearts, I know it's a good joke. And so I really do think the jokes are good. And I think they're going to get better. Like the Green Day joke, for example, where I was like, wow, guys, it's a Green Day and you didn't even have to wake up when September ended. That was fire. That was good. You can't say that was bad. That was amazing wordplay. Let's not even call it a joke. Let's just call it wordplay. But I'm not doing it on purpose because I'm a creative dude. I want my jokes to be good. And so I actually want them to be legit. So you are better than Fox Business and CNBC. That's the goal, dude. That's the fucking goal. My dad was talking to me last night. He was like, so are you making this your career now? And I was like, yeah, pretty much. And I could see the sorrow in his eyes. He's just like, oh my God, this fucking guy. No, I'm just kidding. My dad's very, very supportive. But, my dad probably wanted me to go to JP Morgan and get 90 grand and be in some fucking office. But my dad is very empathetic to my happiness. And he's not like a traditional Indian dad. Like a traditional Indian dad would never let their kids even be doing what I'm doing, dude. They would like literally force them to fucking get some stupid job. But I think two things. I think I gained a lot of credibility with my parents in college because I was making a fuck ton of money, dude. Like I was making $7,000 a month. I was making more than my parents at one point, right? I bought my own car and then I crashed it 2 weeks later and then I paid for the crash. Like at some point when you make your own money, your parents can't really say that, you need to go get a job because it's like, I'm making money. Like that's the whole point of a fucking job is to make money. Like at one point, my sophomore year, I was making $75 an hour. And my mom thought I was selling drugs. Like legitimately, my mom was like, she confronted me one day. She was like, are you selling drugs? And I'm like, no. She was like, how are you having all this money? I was like, I told you, I teach people how to speak and they're paying me to teach them how to speak. And she was like, I don't believe they're paying you $75 an hour. I'm like, I don't know what to tell you. I'm not selling the blow. I might be doing the blow in college, but no, I never did the blow, but I'm not selling it. So, that was one thing. And once you develop a rapport with your parents that you know how to make money, they start to trust you more. And then out of college, I had some big consulting gigs and all that stuff. And then I was able to, do what I had to do. With Audia, obviously didn't end up being successful, but I raised money. You raised almost $500,000 by yourself. No fucking VCs, no Stanford, no Harvard. Like, your parents give you a little bit more respect. And then you start, taking content more seriously. You're paying off all your bills. You start making some money in the stock market. And, like when I made the money off SoFi calls, I was like I went downstairs like, hey mom, hey dad, I just made $1,200. They just looked at me like, this fucking guy. Like they just don't even believe that. Right. So at some level, you start to think, okay, our son's not delusional. Our son is just super creative. And my mom really sympathizes with this because you guys know the story about my mom. She wants to be a fashion designer, and her dad like ripped up her fashion application in like the 1980s, and he made her go into accounting and shit. And so like my mom always has just had this creative desire to like be super creative. So my mom like is fully supportive of my creative ambitions. And my dad, once the money's coming in and, you know, you're like, hey dad, you know, I made $9,000 in fucking November off stocks profit, not paper gains. I made 9,500 in profit in November in 2023, pure money in the bank. When you can tell your dad that, then it's like, all right, you know, maybe this kid is figuring some shit out. So I think they allow me to be creative. They trust in me. And then, you know, I mean, they're seeing the growth of the live streams as well. I mean, they know there's, you know, hundreds of people tuning into it and the channel is growing. And they know when I get committed to something, I go all in. Like the reason I think I'm going to be successful on YouTube is because when I get committed, I go all in. Now in music, I got committed in 5th grade. I went all in. That failed. I didn't have the talent. Basketball, they saw how many years I put into basketball. I didn't have the height to go all in. That ended up failing. Speaking and debate, once I went all in my junior year of high school and I became the fucking top debater in the country, they just realized, look, when this guy goes all in, they go all in. He goes all in. And so when it comes to YouTube, I've pretty much gone all in because it's basically like speaking and debate. The stock market is a debate. All of these stocks have different arguments. And then on YouTube, hopefully I have the creative personality to communicate my arguments around those debates in a meaningful way. And then if you're just strategic with how you grow it, it's kind of like maybe this kid will figure it out and this will become really bigger than we thought. And so my parents are giving me the freedom to do that, you know, and that's it. Chris says unusual creative is code word for gay. Oh my God, dude. Oh my God. You know, my parents have never asked me if I'm gay. Well, they knew I had a girlfriend back in high school, so I think they knew that, but I'm not gay, so I think I don't think they have to worry about that part. But dude, I for an Indian parent, I think they'd rather have some fucking creative YouTube kid over someone who's gay. I'm sorry, that's just the reality of it. My parents would probably be very accepting if I was gay, but even my parents, dude, would be like, "Fuck, dude, did you have to be gay?" Like even like in the Indian households, it's not that easy to be gay. That's all I'm gonna say, and that's just the truth. I mean, you can hate it or love it, but that's just the damn truth, dude. It's very hard to be gay in traditional households. I mean, immigrant families in general, dude. Like the people that come out to their parents and all this stuff, and their parents celebrate. That's only white people. I'm sorry, that's only white people. It is what it is, and that's not being racist. That's just the damn truth. Like you have to have generational wealth, and you have to see your kid come out and say they're gay, and you have to be accepting. Like that shit doesn't happen in a lot of immigrant households. It just doesn't. And maybe it'll change. Hopefully over the next 20 years, if I have a child who's gay, I'm going to be very accepting of them because, you know, like I don't really care. To me, being gay is not a big deal. It's never been a big deal. So me and my sister's so empathetic, right? She wouldn't care. And I don't think my parents would care, but my parents wouldn't get it. Dude. Like I can't even imagine telling my parents I was gay. And now everyone's in the chat going to make a joke. We're like, well, you better do it soon because you are. Because I know you guys. I know your jokes, but I don't know if I could imagine saying that to my parents. Like I'm trying to think how that conversation would go, dude. Like telling them I'm going to go all in on YouTube was way easier because I just showed them the numbers. I was like, guys, it's very simple. If you build a personal brand and you have hundreds of thousands of followers, the opportunities to make generational wealth are endless. I have an opportunity right now. Somehow I stumbled into it based on my creativity and my speaking talents where I can talk. People want to listen. We're making the show better. We're getting guests that come in. Like this is becoming a real brand. It's becoming, you know, there's jokes, there's humor, there's all this stuff. This is an opportunity of a lifetime. I need to fucking go all in because by the time I wake up when I'm 30 years old, I might have 100,000 subscribers. I might have a very big personal brand. I might be able to make many investments just based on the connections that I know. I might be able to generate millions of dollars off of social media. Like I might really be able to make this something that pays off your house. Getting a job at JP Morgan is not going to pay off the fucking mortgage. I'm sorry. It's not. We need to make millions of dollars, not 120 grand. And then Uncle Sam takes 40% of that. And so they were like, you know, they didn't really care about the money. That was my justification. But to them, they just want me to be happy generally. So they understood it. I mean, I was a pretty persuasive. I'm the one who persuaded them to get me a phone in 5th grade. I know how to persuade. Now, if I was gay, I don't know how to persuade on that, dude. That's a tough one. That's a tough one. That's a very tough one right now. Kelly says, my parents are as white as snow and they definitely didn't celebrate. I think white parents today celebrate more, but it wasn't the case 10 years ago. Yeah, I agree with that. I mean, obviously, I'm making a big generalization about white people in general. But I think in 10 years ago, that probably was way more taboo. And 20 years ago, it was very taboo. Even if you were white, black, Indian, it doesn't matter. But 10 years later, the stories I see about people coming out, they tend to have a very accepting family. And that family is either middle class to upper class or white. That's the trends I tend to see. Now, I could be wrong on that, right? It's a very broad generalization, but it doesn't mean all white people are easily able to come out to their family. But it is something that it does in a Hispanic household, you're gonna get your ass beat. Indian household, it's gonna be tough. Black household, it's not as easy to, dude. I grew up in Newark, so it was largely African American community. I had black friends who ended up being gay, and it was a tough situation, dude. Like, dude, my friend Adegoke, he's Nigerian. His mom would in Nigerian households, being gay is one of the biggest sins in the context of Christianity. And if you know anything about Nigerians, they are Christian to the core. So if you're gay in a Nigerian household, you're getting kicked out, dude. It's tough. It's very tough if you come from ethnic cultures and you have to rationalize being gay, you know? So it's tough. It is a tough situation. I love that Amit debating to prove he's not gay. But regardless, I don't know how it comes. The whole point of why I brought this up is that my parents are super respectful and acceptive and allowing me to be creative. But it's tough to take it to a different level as well. You know, I don't know how I'd tell them that I was gay if I was gay. I think they would accept it, but it would be tough. So being creative is way easier, is what I'm trying to say. Being creative is just way easier. My parents are like, all right, be creative. Someone had so Alex says, can you explain why do you live with your parents, Amit? I do too, and I share a lot of and I share a lot of things that you believe. It's kind of cool. Yeah, dude, the reason I live with my parents is very simple. If I lived alone, I would be bored. Like, what am I going to do paying $1,500 for rent, wasting that money for rent, living in some random apartment, being bored? Like, it's just, there's nothing exciting about that. In this house, I get to live rent free. I get to help around the house. I get to do a lot of things around the house. I get to, take care of my parents in a variety of different ways that I do a billion different things to take care of them. And I get to have this studio and I get to do my thing and I get to build. Like right now, to me, the next 4 years from 26 to 30 is, can I build an audience that is so grand that my name in the context of finance media becomes a ubiquitous name? Can I start my own investment firm one day? Can I start my own research firm one day? Like, there's so many opportunities, right? But right now it's about, can you develop a fucking name for yourself? Because developing a name in any industry, in any niche, is the most difficult thing in the world. Can I collaborate with people to develop my name? Can I get a Dan Ives on my channel? Can I do that over the next 4 years? And so to me, my goal is not to be independent on my own. I'm basically independent the whole day, dude. No one's home. So it's like, it's not that crazy. My sister moved out a couple of years ago. She moved back in because it was just boring. Like, it was just like, it's not, I lived on my own in college. So I got the experience of being independent and being creative and all that stuff. And, it's just not that exciting to me. On top of that, I get to save money. And my goal is in the next 2 years to buy a house, but, house hack it in terms of like, have the people that are paying the mortgage for the house, the rent for the house, cover the mortgage. And then I'll live in one of the rooms in the house. And I don't always have to live there, right? I can come back and forth to my parents' house. So it's just not that interesting to be on my own. I would just be bored. I would just be super, super bored and it would not be that exciting. And so that's the reason. All the money saved can be added to more investments, 100%. It could be added to more investments. Growth Shock Viz says, when I moved out, it gives you an added burden of responsibility, and that made me work harder because it's all on me. I thought it was great, but it made me work harder. Yeah, it does work hard. It forces you to work harder as well. And, if I was home alone right now, I would just have the studio and I would just be in the studio live streaming all day. It's the exact same thing in this house, dude. Like, there's literally no reason. There is zero reason to be in a different spot. It just doesn't matter. It's just not that serious. So to me, I think it's good. Thank you. We got Kelly's comment. Can personally confirm Amit is not gay. There we go. Can personally confirm Amit is not gay. So that's good. Bro, the reason is you can't get a girlfriend or wife if you're living with your parents, my dude. Okay. So, number one, I do have a girlfriend, even though I'm not living with my parents. So you can definitely get a girlfriend if you're living with your parents. Depends on the circumstances of having that girlfriend where she is. Maybe she lives in Canada. You know, maybe her name rhymes with belly, and so that's what happens. Obviously, I'm talking about Kelly, and so that is one thing that helps it work out. I mean, if Kelly lived in New Jersey, yeah. Look, if I had a girlfriend who lived in New Jersey, I would probably be more incentivized to work out. But I don't. The bitch lives in Canada, so it's a lot easier to justify living alone. But second of all, honestly, if I had a girlfriend who lived in Jersey, there's a world where she might live with her parents as well. And both of us might come to the conclusion that says, hey, why don't we both live with our parents from 26 to 28, save up a shit ton of money, and then at 28, we both move in together and we have a lot more money saved. I see a lot of my friends doing that right now, a lot of them. And it's not that crazy. It's not that crazy at all. So I think there's definitely a world in which if I had a girlfriend in New Jersey, I would be like, look, babe, it makes no sense at the time of my life where I'm in fucking grind mode to be wasting $1,000 a month on, month on rent and all the other expenses. We can still meet up and do what we have to do, right? There's plenty of ways to get the job done, if you know what I'm talking about, without having to literally have an apartment every night. And also at 26, I don't know if I want to live independently with a girl right now. Like I that's closer to 28 to 30. At 26, I kind of still feel like I just need to keep grinding more. You know what I mean? So I think there's absolutely a way that you can have a girlfriend, have a relationship, and not have to move out of your house and be strategic about saving up enough money and then moving out together. So to me, that makes enough sense. No shame in living with your parents in your 20s if you're saving and working towards your future. Yeah, I agree. Under 30 is fine. After 30 is when it's debatable. I agree. I agree with that 100%. I think I think that we can all agree on that compromise. So I believe when I'm 30, I will definitely be moved out. I quite frankly think when I'm 28, 29, I'll be moved out. But my goal is let's get enough money in the meantime, right? And then let's do it. Let's do it properly. Let's not do it immaturely because you want to live on your own. It's like, I lived on my own in college. Like it was fun. But it's not that fun to be paying this much money. And by the way, in college, I paid $500 a month for rent. So that's why it was really good. Now, after 30, I think it's better. It's better to do that. So James Velez, holy crap, I woke up super late. You're still going amid. Yeah, these 10-minute Q&As, they turn into fucking hour-long Q&As. But it is what it is. It is what it is. Alex says, it seems so smart to live in an Indian household altogether. And in white households, they all move out and buy mortgages. I respect that about Indian cultures. It's who I learned from. Now, I agree and disagree with you. So Indians, for those that don't know, they have a culture of the wife, the husband, the mother, the father, which are the in-laws of the wife living together. My mom was a different Indian woman. Okay. She did not like my dad's mom at all. I'm talking about she hated her. She hated my grandma. So when my parents, who did live with my grandparents for about 5-10 years, my mom told my dad she would get a divorce if they did not buy a house outside of our grandparents or her in-laws because she just did not like them. So my dad, struggled with that. That was a tough situation for him. And my grandparents, her in-laws hated her for that for the next 20 years. Literally, they hated her till the day they died. And they all died in December 2022, both of them. Not my grandfather as much. My grandfather was really chill. My grandmother, she hated my mom, dude. And so that led to a lot of really weird family things in the culture. I mean, it was, when I say I have a tough childhood, it's never because we needed money. It's never because we never had food on the table. It's never because we were broke. It's because my mom and my grandma hated each other. And so there was a lot of just, I don't even know how to describe it, dude. But it was, if you have any understanding of what Indian matriarchal relationships are like, it was really tough. And it created a lot of instability in my parents' relationship. So to your point, Alex, my mom has told me that when I marry my wife, she is unequivocally banned from living in the same house with them. Like my mom has made it a very big deal to be separate from me and my wife because my mom saw all the pain that happens when, the mother-in-law and the wife live together and how tough of a situation that can be. And so my mom just wants to be the best mother-in-law for my wife because my mom had such a, quite frankly, shitty mother-in-law. And she just wants to make sure like she is the best that she can be for my wife. And part of that means not living together because that shit just involves a lot of shit. So It's tough. It's very, very, very tough, man. It's very, very, very tough. But it's not a it's a tough situation. Chris is in the chat. Yeah, Chris knows. Indian mother-in-laws, Jagnor Singh. He knows. I can tell by your name. Yeah, bro, you got to figure that shit out before marriage. Chris says, I got lucky. I love my mother-in-law. The problem is my mom had an arranged marriage. And dude, in the beginning of the early days of their marriage, like right before they got married, like, so my grandma, she wanted a dowry. For those that don't know what a dowry is, it's basically the wife's family giving a lot of money to the husband's family in exchange for the husband. Because in India, the husband, the guy is like the fucking cow. It's like the fucking god of the country, right? Like having a boy is just what makes everybody. If you have a girl in India, like you're not as you just feel like you're not as blessed as if you have a baby boy. So my mom went up to my dad. They had lunch one day, and she told my dad, I am not going to go through with this arranged marriage if you let your mom ask for a dowry from my family. So my mom was a fucking rebellion at 22 years old, dude. She was like, we're not doing this shit. Now, I'm going to get a little deep here, get a little personal here, and I'm going to say something that some of you guys may agree with, some of you guys may disagree, but you know, this is another reason I am so grateful for people actually coming to these streams and listening to this content and for this channel to be growing. I don't think I should be alive right now. And the reason for why I don't think I should be alive right now is because I believe my mom and my dad should never have gotten married. I believe they never should have had kids. I believe they should have gone their own separate ways. And my mom, quite frankly, should have left my dad in 1992 when she saw what his mother-in-law was doing. And the reason for that is because their relationship has been so tumultuous over the past 30 years. They're still together and they're better now. But it's some of the shit you grew up as a kid. I mean, every day when your parents are fighting like cats and dogs for hours, and your mom is just crying and crying and crying, and your dad doesn't get it because, you know, he's having to deal with his mom. You kind of just like, well, maybe they shouldn't have fucking gotten married. Like as an objective third party who's looking at their marriage, like maybe that shouldn't have happened. Maybe you guys are just not compatible. And so part of me is so grateful to be alive and so grateful for the channel and so grateful for people consuming my content. And quite frankly, the reason I think I'm going to win in the creativity game, because the sacrifices my mom gave up for me to be doing what I'm doing right now. It's why I want to work harder than everyone's like, oh, mate, you work so hard. Like, dude, I don't fucking work hard enough. I need to work fucking harder. Like it needs to be at a 10x level of what it is right now, because the shit my mom gave up in terms of her marriage to not only bring me to life, to bring me on this planet, but also to allow me to, you know, live out my dreams. It makes you very humble and grateful for the fact that, you know, you're even alive. So like, and I'm saying this I'm not even saying this as like a, oh, boo-hoo, boo is me type of, I want empathy or sympathy type of shit. I'm genuinely saying, I think if I was like a ghost in 1992 and I was like, I could tell my mom something, I would be like, go marry someone else. Because it just wasn't worth the shit she had to go through. So part of me wants to be so successful in the creative space, because it's kind of to justify to my mom that the sacrifices she went through were worth it, because her son became ultra successful. Maybe that's healthy, maybe that's not, but I'm doing this for me first and foremost. But part of it is also like, my mom wanted to be creative. She couldn't be creative. Her dad shut that shit down. Then she got into a fucked up marriage for 25 years. And so maybe I'm kind of the saving grace of proving to her that her sacrifices in life actually meant something, because I end up living out her dreams, which were to be creative. And I live them at a fucking grand meteoric scale, you know, at a scale that's just unheard of. And to her, having 800 people in the stream, she's already like, that's insane. What happens one day when, you know, it's 8,000? What happens one day when there's actual money coming from this? What happens one day when it gets really big? Even raising money for Audia, dude, like almost $500,000. She was like, what the fuck? She just couldn't believe it. You know, she didn't say my son is unemployed. She was saying my son's running the next $1 billion startup. That's what she told her friends. Like, my mom has just been the most supportive. And when I wanted to shut down the startup, that was the first person I talked to. I was like, Mom, I don't think it's working. And she was like, all right, do what you got to do. Just don't fucking stop going for your dreams. You know? And so, you know, my mom is just, it's one of those things I can get emotional about. But, and quite frankly, you guys want to know the first time I really started crying as a teenager? I remember like it was yesterday. Kevin Durant gave a speech in the NBA when he won the MVP. Okay. Kevin Durant gave a speech. If you guys know anything about basketball, big basketball player, he got the MVP in 2013. I remember in 2013, I was on YouTube. I clicked on the video. I remember this like it was yesterday. Kevin Durant, his first MVP, he looked at his mom in the audience and he said, "You're the real MVP." And he started crying, dude. I'm like low-key fighting back tears right now. And I remember watching that video. I remember it like it was yesterday because it was the first time I really started crying. And I started bawling my fucking eyes out. And just seeing him cry over his, like he just won the MVP. And he's looking at his mom. He's like, "No, you're the reason I'm here," right? It's one of those things where, you know, it's just, it makes you so grateful that someone actually cares enough about you and cares about your dreams. So that's part of the reason I also think I'm on this creative journey, because my sister's the opposite. She's not creative. My sister went the opposite direction. We both dealt with our parents' relationship in a different way. My sister dealt with it in the context of denial and just like not giving a fuck. I dealt with it more so in terms of internalizing it and being like, how can I resolve some of the shit my mom's been through, some of the trauma, and my dad, you know, my dad's been through a lot of shit as well, because he had to pick between his mom and his wife. And, you know, it was hard for him to make that decision. He picked his mom, quite frankly, if I'm going to be honest here. And my mom never forgave him for that and still hasn't forgiven him for that to this day. And that's why my mom tells me whenever I get married, she's like, "No matter what happens, you pick your wife over me." And it's just like the fact that she's willing to even go through that sacrifice. It's just, it's tough, right? It's very, very tough. So from that perspective, to your point, Alex, about Indian households living together, I think that's why my mom doesn't want to live together. But I also think that's why I'm on this creative journey, because I want to prove to my mom that, look, you got into a fucked up marriage. You ended up having me. And I know I'm the blessing of your life. And I know I'm one of the saving graces of your marriage is that you had a really cool kid. But I personally think you shouldn't have got married. I don't think you should have had kids with my dad, because it was 25 years of a really fucked up relationship. So to make up for that, let's see how far I can take this whole creative journey and keep going from there. And so that's what we're doing. That's what we are trying to do. It's the tough reality of arranged marriages. My story is not isolated. A lot of people, it's I think universal across the people that got married in the 60s and 70s in India, even the 80s and 90s. And now we just got to keep doing what we got to do and keep growing and keep trying to be successful. All right, that's it. Friday, 2nd. This is what happens when you stream for 2 hours. Friday the 2nd. No, it's Friday, February the 2nd. Okay. Market open is concluded. Real quick look at the equities. Robinhood 1089, True is 3647, Palantir 1661, up 1.7%. Netflix is up, Google is up from 130, SMCI 573, Meta still is up 20%, AMD is up 2%, Nvidia is still 652, up 4%, SoFi is up a little bit, 775, and SMCI is down 1%. S&P 492. Wow, look at that. S&P is almost up 1%. Look at that. Not bad at all. Robinhood 1090. And then we got Palantir at 1661, 1.71%. All right. That's it. Thank you everybody for being here. Appreciate it. Means the world to me. I'm like, "Oh, you're not crying." I'm crying. Dude, there was a little bit of a tear. I don't know if you guys saw it, but I just like swallowed that shit real quick. I was like, you guys aren't about to see that shit. As soon as I talk about Kevin Durant and that whole story, it makes me cry every time. You know, another song that'll make me start crying like nothing? Look What You've Done by Drake. If you want to start crying about your mom, Look What You've Done by Drake. I was in the fucking gym doing bicep curls, fucking crying, listening to that song, dude. Fucking the hot gym girls are looking at me like, "This fucking loser, why is he crying?" I'm like, just lifting the fucking thing. I'm like yelling as I'm lifting. Like that song will get you to cry. It'll get you to cry. All right. Thank you, everybody. Appreciate it. We'll see you live for market close, 3:45. We'll see how this market ends out. Then we'll have Palantir Weekly at the end of the day. And I think the Palantir Daily episode might come out on Saturday tomorrow. We'll see. We'll see if it comes out on Saturday. One last quick thing for those that are on Twitter. I'm doing a Spaces at 2 p.m. Eastern on Twitter with a whole Mars catalog. I said his name slowly, so you guys can't say I'm saying it wrong. He is a big account on Twitter. You can say you're going to the Spaces right there. He has about 400,000 followers. We're going to talk about Tesla, what's going to happen over the next 5 years. It'll be fun to pick his brain over the next over Saturday at 2 p.m. And it'll be exciting to do that on Twitter. I might stream that on YouTube. We'll see, but definitely will be there on Twitter. All All right, that's it. Thank you, everybody. I'll see you at 3:45. Have a good Friday. Enjoy. If I don't see you for the rest of the weekend, spend some time with your family, get some good food, enjoy it, go for a walk. And I'll see you guys Monday for our Super Bowl Palantir earnings. Bye, everybody. Have a good one. Bye-bye.